I think what we've seen in a combination of between Walmart and other sort of not retailers, but manufacturers that have branded material is that consumers are choosing brands, even at the lower end, where there is the most premiumization that they require. But then they are choosing more of a Walmart over a Target at the lower end, because at this point, you can't really stop how much food you're going to need. You can try and make your clothing and other sort of discretionary items last a little bit longer, stretch them a bit longer, but food is just such a requirement. And so when we then combine that with what we saw from the financials companies, we're seeing that at the lower end, they are just using less credit, trying to get paid off what they can. And so if they're just working with cash, it's going to be, all right, let's get all the discretionary stuff that we have to get on top of the staples we need at a place like Walmart. And I'm not quite sure that we're seeing that absolute trade down into, say, food shopping at dollar stores quite yet. I don't think we're there just yet.
I don't know, man. Food shopping at dollar stores feels like you are asking for expired stuff. Anywho,
it's
That's exactly what happened to me. Buying bread, and the person at the checkout goes, "You don't want that, sir."
You're like, it's green. Why are you buying
she's
something
like,
that's green? To that point. Shelby, there's tons of retail action next week, right? You get Macy's, Target, you do get the dollar stores, Ross stores, like you get the specialty guys. What's going to be a macro signal for you here?
To me, I think it's actually going to be these sort of the sort of middle to lower end, the Ross, the Burlington, the dollar stores, letting us know how much of a higher income customer share they're picking up. Because it's been very obvious that they were going to get more of the middle to lower end. That's the whole point of their retail premise, right? So the question now is, how much of the upper end consumer are you reining in? For Ross, are you capturing some of the consumer that was going to Marshall's or even Nordstrom Rack, similar for Burlington? And then when we look at Target, are they able to capture or hold on to any middle income to lower income share? Because we do know that they have a little bit more of a premium product.
Just so we're clear here, in the Journal today, there was an article about TJ Maxx and why it's awesome.
Right.
Because they were like, anyone who's anyone can now go and buy like super high designers for like a third of the price. I love TJ Maxx. It's like in my blood. But I mean, it was in the Journal. I'm just saying, like,
so now
it's already happening, but now, like, you know, real people with like serious money, like Real Housewives people are doing it. Just putting that out there. Yeah,
I didn't know that. Okay,
according from the Journal.
Very good. Well, if the Journal has it, I'm going with it. Hey, Shelby, in some of your stock picks here, one of them is Kenvue. Just a reminder, that was a spin out from Johnson & Johnson, I guess. Talk to us about Kenvue.
Yeah, what's interesting about Kenvue is they sort of followed in a trend that a lot of pharmaceutical companies were doing, where they went ahead and separated their consumer brands. So we're talking about, you know, the Tylenols of the world into a completely separate company. And what interested me about that going into earnings season was whether or not they would be able to sort of maintain that demand on premiumization, when we think about the fact that if I need Tylenol, I could just buy acetaminophen and it's cheaper. And what they showed us in earnings is that they've been able to do it. So the brands that they've cultivated have held on to people to spend that extra dollar or $1.50 on baby wipes, on feminine products, on pain and other healthcare. So that was a great signal to us that to some degree, with the right mix of pricing, you're able to hold on to people for even brand name staples. And I think that is really important.
Your last pick here that you have on the notes here is MasterCard. Why do you like this stock versus some of the other guys?
Yeah, one of the things we love about MasterCard really in general is that they're really just a toll taker, right? So even in a sort of downturn, the rails still have to be used to process payment. The other thing is really their weight to credit compared to debit. So we do know that a while ago we had that legislation that really compressed on debit fees. So when we look at their competitor, we see that they've got that better mix to that, sort of higher fee for using the credit rails, and also knowing that consumers leaning a little bit more on credit in these types of times, at least in the middle to upper end, generates more fees for MasterCard. So when we think about the credit to debit mix plus their international opportunities, we feel that they're really well positioned when it comes to the payment network space.
All right, Shelby, thank you so much for joining us. Shelby McFadden, investment analyst at Motley Fool Asset Management, joining us from Alexandria, Virginia via Zoom. Let me show you how cutting edge I am on fintech.
Okay.
When I go buy my salad today for lunch, I'm going to use Apple Pay.
Hey, look at you.
Exactly.
What happens to the wad of cash in your pocket?
I still have the wad of cash. It lasts a lot longer. Like when I was growing up, even as a young adult, I would only use credit cards for big purchases, kind of special one-off type of things, not for day-to-day. I use cash for that. Now it's the exact. I think out there in society, it's just use it for everything.
I'm sorry.
Oh, no.
Michael Barr.
Oh my God! First of all, he pulls out a wad of cash, a couple of $100 bills.
Absolutely.
You know, not the deed to boardwalk like I have in mine. But wow, what happened to cash?
You know, the only reason I have cash, and John Tucker can back me up on this, you go down to the Jersey Shore, that's a cash economy down there. You walk up to a Jersey Shore bar, you don't Apple Pay, you throw a 50 or 100 on the bar, and that's how you announce your presence.
I also love that you said hundy because I say that at home. My husband refuses to talk to me. But to that point, but actually, tipping is the problem. Like if you don't have cash, I never carry cash anymore, and the tipping is huge. If you go get a mani-pedi, it's like, oh God, do you guys have Venmo? And then you're like scrambling, and it's stressful.
It's a changing world out there in terms of you have to be on top of this fintech. And a lot of people say, just buy MasterCard or Visa. That gets your exposure to fintech because it's all got to run over their systems.
And remember, take care of your bartenders, ladies and gentlemen.
Exactly right. With our news in New York, here's Michael Barr.
I am so sorry I opened my mouth. Thank you very much, Paul, Alex, John. Scotty Scheffler, the world's top-ranked golfer, was arrested this morning on his way to the PGA Championship after he tried to drive into Valhalla Golf Club following an unrelated fatal traffic accident. Scheffler was attempting to drive around the crash scene, according to ESPN's Jeff Darlington, who witnessed the incident. After a police officer told him to stop, Scheffler continued to drive 10 to 20 yards before stopping. Darlington says Scheffler was pulled out of the car and placed in handcuffs.
Very rapidly, very aggressively, he was detained in that police vehicle for approximately 20 minutes. The police officers at that point did not understand that Scotty Scheffler was a golfer in the tournament, nor, of course, that he is the #1 player in the world.
Scheffler says there was a big misunderstanding of what I thought I was being asked to do. He faces 4 charges, including second-degree assault of an officer. Meanwhile, round 2 has started, and Scheffler did make it to tee off this morning. Xander Schauffele, who will tee off this afternoon, leads at 9 under. Today, we will broadcast live play-by-play after the U.S. markets close on Bloomberg Radio and all through the weekend. Conservative Supreme Court Justice Samuel Alito is under fire after the New York Times printed a picture of an upside-down flag outside his Virginia home days before President Biden was inaugurated. It's the same symbol used by rioters at the Capitol on January 6th. New York Times reporter Jody Cantor.
One of the bedrock rules of being a federal judge is that you're not supposed to take part in politics. You're not supposed to display signs and symbols. You're not supposed to really do anything that could cause people to think that you're less than impartial in a case.
Alito says his wife did it to get back at a neighbor who had put an anti-Trump sign on their lawn. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Market on track for its longest streak of weekly gains since February. Not a lot of action on the major indexes. You have to look below the surface. Right now, 7 of the 11 major industry groups in the S&P 500 higher. Energy in the lead as oil prices, they rise. Healthcare, that is the biggest drag in the S&P 500. And the S&P 500 right now hovering near its record, about 5 points higher at 5302. That's up about 0.1%. Dow Jones Industrial Average, 32 points higher. That's at 39,900. The NASDAQ 100, 25 points higher. That's up 0.1%. Mohammed El-Arian at Queen's College, Cambridge, worries the U.S. economy at this point has no buffers.
We no longer have pandemic savings. We have higher balances on credit cards. We have higher interest rates. So we're totally dependent on wage income. And if anything happens to the labor market, which I hope it doesn't, but if anything happens, then we are going to slow down really quickly.
And on the economic front, index of leading economic indicators posting the sharpest drop since late last year, casting some doubt on the strength of the economy. The decline, this is for April, reflects weakness in consumer expectations, factory orders, and building permits. And it is the third Friday of the month, which means options expire today. Right now, again, S&P 500, 4 points higher. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Pull it out.
See, 4 points. There's your volatility on triple witching.
Well, it's NASDAQ 144% higher in terms of volatility when compared to the 30-day average of trading.
That's something.
You know.
John Tucker, thank you very much.
Oh, you're so very
I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics and finance through our lens of our Bloomberg Intelligence analysts. There are 400 of them worldwide. They cover 2,000 companies and 130 industries. We got you covered. We just talked about retail. We saw Walmart. We got Macy's, Target, some dollar stores also coming up. So we go nerdy because we can do that on Bloomberg Intelligence Radio, and we can talk to a forest and paper products analyst. It's a box analyst. Our box is shipping. Where's the demand? How's it going? Ryan Fox is a Bloomberg Intelligence market analyst for forest and paper products, and he joins us now. Ryan, we are super excited to talk to you about this. How's the box business?
Well, the box business is not seeing its best days. We had the worst first quarter in the last 8 years. Box shipments are down over the last 2 years, almost 10%. And maybe there's some silver lining because the second quarter, statistically speaking, over the last 30 years has more often than not been a better quarter than the first. So we do see maybe there's going to be an increase. On average, increase was 3.2%, like I said, over the last 30 years. However, given the backdrop that we're seeing in the broader economy, we think we're going to see a more muted increase, maybe more like 1% sequentially, which would still be a year-over-year decline of about 1%.
So, Ryan, I know you and other analysts and investors look at the year-on-year kind of growth rates, and that's kind of big. Just give us a sense of the absolute numbers. Like, how many boxes, whatever units you use, are being used, like, today versus 2019?
Yeah, so one of the best terms is in billions of square feet, right? So when you were to, if you were to take a box and unfold it and lay it out flat, you just do length and width and all that.
That's what I do when the boxes come. It's my job to break them down.
Of course, understood.
Well, yeah, you got to flatten them and then put them in your recycling bin.
Yeah, John Tucker doesn't do that. Just throws them in the recycling.
Well, I try to think outside of the box.
Oh, no, Ryan.
All right, Ryan, let's get back to it. Just, again, today's demand versus, pre-pandemic.
Yeah, so in 2019, that volume was like 393 billion square feet, right? During the pandemic, it grew to 416 billion square feet. Last year, it fell to 380. And this year, our projections, our mid-year outlook says it's going to fall again to about 376. Again, a slight decline over last year. We're just not seeing super strong economic signals. And our box, our box producers, Green Markets is a Bloomberg company. They go out and they survey box producers all across the U.S. and they have a good signal, right? The signal right now is that the second quarter could be up as much as 3.5%, which is in line with the statistics we've seen over time. However, again, first quarter was down substantially. So we think there's some optimism error, and we would guide down based on that known optimism error.
Ryan, this is a really dumb question, but I feel like the trend is don't ship stuff in a box. Like I can order from different places that shoes, I agree that they're in a shoe box, but you don't put them in like another box. You just ship that shoe box. Is that eating into this market at all?
It certainly is. And I could talk for an hour about this, but I won't. But yes, you're exactly right. There's a definite move by brands to reduce their waste and become more sustainable. So you are seeing companies like Amazon utilize paper bags and things like that.
So talk to us about the green options out there. What are the green options?
Well, it depends on what you mean by green, right? So
what do you mean by green?
Well, so there are two main initiatives, right? So the first green initiative is to find something that's more circular in nature, like a paper bag, because most people identify paper as a more sustainable, more circular option. Now, if you're looking at the data, that paper may have a higher greenhouse gas emission index. So while it's more circular, it's going to have its trade-offs. If you're looking for chasing the greenhouse gas initiative, maybe you're going to a plastic, something that's lighter in weight. Very broadly speaking, greenhouse gas emissions follow weight. So if you're using a very lightweight paper or plastic bag, it will likely have a lower GHG emission, but it's less circular. So it really depends on the goal of the company.
Are people willing to pay more for greener packaging? Do we know that yet?
They say they are.
Yeah.
They say they are, but no one really is. I mean, at the end of the day, I think it's just opinion, and it doesn't really mean anything.
So what are the companies that you follow that if investors want to get exposure to this, where should they look?
Well, I mean, on the Bloomberg terminal, our packaging dashboard, PACKG is the call numbers there. We follow International Paper, WestRock, Packaging Corporation of America are the big three in the U.S. They represent about a $45 billion market cap.
What represents the best kind of value? Like, how are these guys sort of trading right now? What's priced in?
Great question. That's way above my scope. So I'm more of a market analyst and follow the bigger industry trends, supply, demand, and pricing. I don't really get into the stocks themselves or the companies themselves.
That's fair enough. Fair enough.
Can I make an inference about inflation out there by looking at volumes of packages being shipped and all that kind of stuff?
Absolutely.
What is it?
So how does that work? Yeah.
Well. So there's some discrepancy. So right now, if you were to look at like some of the federal data, real PCE for goods, for instance, that number is still very, very high relative to the fact that consumer goods are not trending very well. I mean, if a very high number, 90% plus of consumer goods ride in a corrugated box, and that volume is down 10% essentially over the last 2 years, how in the world is our goods spending still up? If it's a real number and it's adjusted for inflation, there's a disconnect there. And I have some speculation on why that is. I think, historically speaking, when you think of things like software, 30 years ago, software it was an actual thing. It was a disk. That may still be one of the items that's counted as a good, but it's no longer a good. It's a downloadable thing. It's a software as a service. It's a something else. So there's probably some noise in there that's not allowing us to see some of this clearly.
That's really interesting. Thanks a lot, Ryan. This was great. We both really loved this segment. Ryan Fox, Bloomberg Intelligence analyst, covers paper packaging trends, sort of diving in to all of that.
Here's one piece of anecdotal evidence. Way back in the day, my buddy got into this business, bought a couple of factories and blah, blah, blah. I invested. Sat there for like 7 years and nothing happened. No dividends, nothing. Finally, I just said, hey, can I get out of this thing? So he bought me out a par. He was very nice. Literally 2 or 3 years later is when this whole Amazon thing just exploded.
Oh, that hurts.
Yeah, that hurts. He sold the company for like twice what he paid for it. And of course, I'm like, made zero on that. Missed my opportunity. Story of my life.
That's no good.
Yeah.
But you also have to wonder, too, what people are buying nowadays. Like, if you're going more to services, like, I'm not going to go buy a spa. So
right.
I guess that it's just the cycle of all of that is really tough. Anyway, that was really fun. That was really nerdy. And we really liked it very much.
It is weird. Some of these boxes are big boxes for like a toothbrush.
I know, right?
Crazy.
What are we doing here, guys? All right. This is Bloomberg Intelligence Radio. Happy Friday.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. We'll look at some of the company stories we're following. You know, the aisles of drugstores are filled with locked cabinets full of toothpaste, shampoo, and makeup. Patients are waiting in line for prescriptions, and none of this is working. Pharmacy profit margins are falling at the biggest chains like CVS Health and Walgreens Boots Alliance. Once a fierce competitor, Rite Aid, actually declared bankruptcy, you recall, back in October. The key problem for drugstores is the front of the store. That's where competition and inflation are making it harder to turn a profit. In response now, Walgreens has been setting up smaller versions of its stores with reduced selections of health and wellness items in front. A rival, CVS, testing out new store designs. They'll integrate the Oak Street Health Primary Care Centers for seniors. According to a new lawsuit, Spotify used a legalistic word change to justify slicing royalties to musicians and publishers, reducing the revenue on which the royalties are based by almost 50%. The change came in March when Spotify added the word bundled to its description of its $10.99 a month music streaming service. It doesn't end there. The National Music Publishers Association has sent a cease and desist letter to Spotify over products it claims are infringing on songwriters' copyrights. Well, first it was vinyl, not far behind along. Come the analog fans who are clamoring for another old format. Yes, cassette tapes. Believe it or not, for Generation Z, it's partly a bit of secondhand nostalgia, and also it has lower reproduction costs and DIY cachet. Emerging artists have embraced the format for smaller releases. Yes, cassettes. I got them somewhere in the bottom drawer, and that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. After a very intense long week, I'm Alex Steele alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence Radio. We cover all the top news and headlines through our lens of Bloomberg analysts. They cover 2,000 companies and 130 industries worldwide. We also keep you updated on world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul. John, chaos in Congress late last night as a House hearing turned into heated exchanges, including back and forth insults. The proceedings were supposed to consider contempt charges against Attorney General Merrick Garland. However, it turned into chaos, starting with Jasmine Crockett and Marjorie Taylor Greene.
Do you know what we're here for? You know we're here about
I don't think you know what you're here for.
Well, you the one talking about.
I think your fake eyelashes are messing up.
No,
what you're
ain't
reading.
nothing. Hold on. Listen.
Order. House Speaker Mike Johnson asked about it today.
It was not a good look for Congress, and we all, I think, need to control the emotions better and get the job done. That's what we're trying to do here.
The Republican-led House Oversight Committee eventually voted to recommend a contempt of Congress resolution against Garland for his failure to turn over audio recordings of special counsel Robert Hur's interview with President Joe Biden. The number one golfer in the world, Scottie Scheffler, made it to tee off this morning for round 2 of the PGA Championship. Hours earlier, he was arrested and charged after an incident on his way into Valhalla Golf Club in Louisville. Police were directing traffic outside the golf club after the death of a pedestrian who was struck by a shuttle bus in an unrelated incident. The officer reportedly screamed for Scheffler to stop as he tried to drive past him before grabbing onto the vehicle. Scheffler, this year's Masters champion, said in a statement, "It was a very chaotic situation, understandably so, considering the tragic accident that had occurred earlier. I never intended to disregard any of the instructions." Scheffler was charged with second-degree assault on an officer. Meanwhile, Xander Schauffele, who tees off this afternoon, leads at Valhalla at 9 under. Today, we will broadcast live play-by-play after the U.S. markets close on Bloomberg Radio and all through the weekend. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, so sport. Okay, I don't get it. How does that happen?
I don't know. I mean, I don't know. I'm just reading the ESPN reporting, which seems to be pretty in depth because they had a reporter right on scene there who just happened to be there and witnessed the whole thing. But Now that we have the words from Scotty Scheffler and his side of the story, I guess at this stage it sounds like just a miscommunication here. And plus you combine that with the fact that there was that fatality just hours earlier. Probably everybody was on edge, maybe.
But he's still facing second-degree assault charges, right, for a police officer.
That's a felony.
Yeah, it's a felony, and a third-degree criminal mischief, reckless driving, and disregarding traffic signals from an officer directing traffic. We were talking about this earlier. I mean, someone talks to me right before a show about something that has feelings involved, and it's hard for me to pick up cues. I can't imagine being a professional golfer, getting charged, arrested, released, have to get there in time. I mean, my game would be toast.
Yeah. Well, yeah, he's playing though. Keep in mind though that the person who witnesses ESPN's Jeff Darlington, and he witnessed it, and Scheffler spoke directly to him as he's being placed in the police car. Please help me. Right. And so there's so many questions to this, and we're going to let this all play out. So see what happens.
We'll let the lawyers take care of it.
He was, I mean, I'm not going to use the right golfing terms, but he was first, right? Going into today?
No, but he's definitely in contention.
He's 4 under, right? He's 4 under going into
so he's
today.
in contention. He's the #1 golfer in the world, so it's kind of a big deal in that little world. And I'm sure, as John Tucker mentioned earlier, it's probably not the look the city of Louisville wants. They want to focus on all the positives of the tournament and so on and so forth. They don't want this, which is now a major side story. It's probably not the look they were.
The coverage on WHAS, which is one of the Bloomberg affiliates, for which we do the Bloomberg money updates, wall-to-wall coverage. It's just unreal.
Speaking of unreal, if you haven't heard about this storm in Houston, you will. We're going to hit that at the top of the next hour. They say rainstorm? Oh my gosh. Some of these pictures are insane. We're going to go right to Houston to get some on-the-ground coverage with our own David Wethy. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, as Alex was just saying, we're going to check in with David Wethy. He's a Bloomberg energy reporter on these Texas storms. 800,000 people without power. Some of the images and the video are just extraordinary, showing the strength of that storm down there in a major energy center for the U.S. We're also going to check in with Bailey Lipschultz, Bloomberg News equities reporter. He's got to come and just explain this whole meme stock thing, what's going on, who's issuing stock, who's not. It is a very chaotic situation. It's Friday. That means we talk municipal bonds.
Bam.
Bam. The Joe Misek, editor of Bloomberg Briefs, soon to be retired.
This is huge.
This is huge news. Joe Misek, he's covered municipal bonds since the beginning of the municipal bond
planning
market.
anything for this retirement party?
We have to plan something for Joe. He's going to join us here to talk about what's happening in the municipal bond market. Let's kick it all off with Mr. John Tucker from Bloomberg Business Flash.
And this Bloomberg Business Flash being brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. S&P 500 headed toward its 4th straight up week, just a few points shy of the record close that we saw earlier this week on Wednesday. The focus for investors shifting to next Wednesday's results. It's going to be from NVIDIA. We call it the poster child of the artificial intelligence boom. GameStop tumbling on plans to sell up to 45 million shares. Those shares right now down another 26%. Meantime, Nadia Lovell at UBS says, the conditions are in place for stocks to continue their bull run.
The earnings season so far, tracking at about 9% year-over-year growth. That's the best that we've seen in 2 years. Revenues are growing. And so we think that all of that points to continued improvement fundamentals for corporations, and that's why the market is reaching new all-time highs.
Well, the worst of corporate America's profit slump may be firmly in the rearview mirror. Analysts have ratcheted up earnings forecasts for the current quarter at the fastest pace in about 2 years. S&P 500 right now up just shy of 2 points at 52.98. The Dow Jones Industrial Average is up 32 points at 39,901. The NASDAQ 100 just about 3 points higher at 18,562. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Paul and Alex.
All right, thank you so much, John Tucker. So I was mentioning it earlier that Houston just battered by a storm. It says it was a violent rainstorm, and I feel like that's really underselling it. At least 4 people are dead. Over 800,000 people are without power. I've had some sources send me some pictures of downtown Houston where the office buildings are. I mean, glass just blown out. I was talking to somebody else who was hiding in a parking lot as cars were coming at her. So I just want to get some take here on the ground. David Wethy is Bloomberg Energy reporter. He joins us from Houston. First of all, David, are you okay? What was it like? What's it like down there?
Yeah, I'm fine. I think a lot of people are pretty surprised by this. You know, there was reports earlier in the week of, okay, we could have maybe more of a flooding event kind of thing. I don't think we quite expected it to be such a strong wind event of what it ended up being. But I think everyone's sort of coming out of it, and a lot of people, as you say, are without power. We're okay up here in the northern suburbs, but this storm was a fast-moving storm, straight-line winds, excess of 75 miles an hour, and it blew from the northwest to the southeast, and it cut right through the center of town, right through downtown, as you say, the skyscrapers with windows blown out. It's pretty surprising to see something of that magnitude cut right through the middle of the city. Lately, we've been seeing a lot more storms hitting kind of the very far outer fringes of the metropolitan area, but I think it rattled a number of people that it hit right through the city center.
You know, I was just mentioning to Alex, you know, whenever there's something happening weather-wise down in Houston, I always kind of Google map it, and I always forget that Houston's right on the water of exposure to the Gulf there. How often do these types of things happen? I mean, I know you guys always have hurricane risk down there in Houston, but just other storms in general.
Yeah, tornadoes are very unusual for Houston. I grew up in the Dallas area, about 3 hours north of here, and tornadoes are very normal for the North Texas area, but for the Southeast Texas area in Houston, pretty unusual. And so this tornado sort of system moved from the west to east and kind of ran south and then all the way through Louisiana and Alabama and along the Gulf Coast. But pretty unusual to get this kind of a wind event in this area.
Hey, David, thanks a lot. Super appreciate it. Like I said, I was getting some pictures from some sources. I'm glad you guys are safe down there. I hope there's no upcoming storm either. David Wethy joining us, Bloomberg Energy reporter, on those insane Texas storms. I feel like Texas storm is like underselling it at the end of the day.
And obviously when you think Houston, you think the power, the energy companies and all that kind of stuff.
Oh, yeah.
So I was just looking at WTI crude oil, not much of a move there. So at least I think that kind of suggests that maybe the infrastructure down there from that perspective is okay.
I
but
like the way you're thinking.
I like the way, yeah, I mean, because when you think about those hurricanes hitting, that's where you see,
they
have a lot of refining down there.
Yep.
Okay.
And the Gulf of Mexico, like there's
Yes,
rigs and everything.
Yep.
So, I mean, traders tend to be used to hedging that kind of stuff and managing it, but this was also a surprise. So it's interesting to see how that went. What was also a surprise was, you know, all the movement that we saw in many stocks this week, and overall headline level, 40,000 for the Dow. We can argue whether or not that's important later, but nevertheless, it happened. Norma Linda is joining us from Bloomberg News. She's looking at some of the big market drivers. Talk us through some of the individual names you're looking at today.
I mean, what a week. I wanted to start things off with food, my happy place. Looking at Cracker Barrel, so that stock is down and seeing its worst day since the pandemic. That's back in March 2020. And shares are tumbling as much as 16%. That's the lowest level since 2011. Now, here's why. Essentially, it's saying that it's seeing lower customer traffic than expected, which confuses me because I absolutely love Cracker Barrel. I mean, I think...
Okay, guys, I've never been.
All right, this is what you do. This is what you do.
God.
Take note. You get the Country Boy breakfast. You get it with... You have a choice of meats. You get the country ham. Get the biscuits and gravy. Okay, and then get a pitcher of iced tea for yourself, because you're going to drink a lot of iced tea.
Not the table, but for yourself.
For yourself.
Okay.
And that's how you roll.
Okay, I mean, it's a
You
South
loosen
thing,
the belt,
right?
you sit right there.
As Bailey says, he says good for the heart, bad for the waistline, right?
Good for the soul, bad for the
Good
waistline.
for the soul.
It's definitely
Okay,
not good for your heart.
the...
Really not good for your heart. I'm more of a chicken fried steak guy, though, just for the
that's
record.
good. That's not bad.
Chicken fried steak? What?
Oh, yeah. They take the steak, they batter it up, they fry it like chicken, you get some gravy on it and mashed potatoes. Alex, you can't think about life in terms of calories or
When you go to
saturated
Cracker
fats.
Barrel.
No, I don't. I just think of it. That sounds gross.
Just try it. Don't knock it before you try it.
All right, fine.
Stock at a 52-week low today.
It is. I mean, it slashes its dividend to increase its investment in the business. It slashed a dividend to 25 cents per share. Now, this is well below estimates from analysts of $1.30. So we're seeing shares tumbling. I mean, I'll be at Cracker Barrel regardless.
Yep, exactly. All right, how about Reddit?
Looking at Reddit, that's on the flip side. We're seeing those shares higher as much as 17% of a surge this morning. This is after it forged a partnership with OpenAI, and this will bring its content to ChatGPT as well as other products here.
All right, here's my read here. This was a perfectly executed IPO. It came out at like $34. They said, this is our business, Reddit, we sell advertising, all that kind of stuff, but we think we have upside from this AI stuff. And people like me were skeptical, saying, what? And they spun a story, and now they're starting to deliver on it, and the stock's just ripping. So this is a company that did what they said they were going to do.
And how do you feel today?
I think it's great. I mean, it's just, again, this is a textbook IPO kind of story. You take a company out, you give a story, you leave something behind, whether it's earnings or a good announcement, so that you can put that announcement out in the next month or 2 or 3, boom, everybody makes money. And then everybody's happy, so the insiders then come back and start selling stock into the strength. That's the game.
Gotta keep an eye.
Okay, but you know that they have fried pickles at Cracker Barrel?
Oh my God.
We're back
So are you
to
a
that.
fan of that? Are you a fan of fried pickles at least?
Love me the fried pickles.
Okay,
and they also
good.
have beignet biscuits with butter pecan sauce.
Oh, okay.
Full trip.
Sounds like Alex is going this weekend.
I
Yes.
mean, where? I have to go like Connecticut to go to
Probably.
Cracker Barrel. I mean, come on. I'm in Brooklyn. Anyway, what else are you doing? Something
Looking at
else?
applied materials,
There we
looking at
go.
some other things outside of food. So we were looking at applied materials because shares were falling earlier. They have since paired and they're into the green. But this is after it had a forecast that came in higher than expectations, but still failed to meet high investor expectations after it had a 32% year-to-date surge. So we do see investors really have high expectations for the company despite its beat. But Morgan Stanley said that it's still impressed by its execution and it doesn't see an imminent negative catalyst with China spending here.
All right, Nor, thanks a lot. Really appreciate it. Oh, no, you're doing
go ahead.
something.
No, I'm just looking for a Cracker Barrel.
looking for Cracker Barrel?
Yeah,
Please.
I'm seeing where I can get you one. Yeah,
Let
I
the
think you're
people
gonna have to
know.
go out to in Jersey, out there on Route 78. So that's kind of
Maybe on your
Jersey,
Walmart
apparently.
tour, you can get some stuff, freeze it,
Yes.
bring it on Monday, and see how that goes. I mean, I have to say though, these prices are pretty inexpensive for what we're getting. And your country fried steak, Bailey, is only like 600 calories plus your sides. I mean, that doesn't sound too bad.
Does that not include the gravy? Because I feel like the gravy might be where
Tops it off.
really
No, it
adds
includes
up.
the gravy.
Oh, it includes the gravy. All right, honestly,
It's a winner.
Relative to probably
That's not bad.
cheeseburger at McDonald's, it's more filling, more cost efficient.
A winner to me.
Wow. Okay. Well, I could go down the rabbit hole. I think I already have gone down that rabbit hole. All right. Thank you, Nora Melinda. We appreciate you. Bailey Lipschultz also joining us. Obviously, the meme stocks, this was all the rage. But GameStop today, so they came out with earnings kind of unexpectedly. They also were in the market issuing shares. I feel like it took them a minute to get it together, no?
It did, and that's really been the thing. We've been writing about it this week. We wrote, I believe on Wednesday, basically saying the window to capitalize was narrowing, if not closing, because GameStop, their quarter ended a few weeks ago, so they needed preliminary results before they could file to potentially sell shares. They did all of that this morning, but Alex, as you point out, the stock was trading north of $50 on Tuesday. Before they even got a chance to sell, it crashed back below 28. So now we're seeing selling pressure down 27%. 55 million shares have traded so far. Again, an ATM allows them and allows their bank to sell up to 45 million shares, not necessarily a sign that they have, but reading between the lines would mean that they probably are.
Do we have any better idea here who any of these 55 million share people are? Like, who's trading this stuff? Again, is it going to go back to your thoughts about that? The quant hedge funds that are kind of really generating the activity?
Yeah, and we're still not seeing really the volume that we saw on Fidelity, on Interactive Brokers, on some of the retail platforms that we did see back in 2021.
And that's data you guys can see, the public can see?
You can see it if you have an account. Yeah.
Okay.
So like I had to create Fidelity. It used to not be behind the paywall. They put it behind the paywall. But like if you have an account, you can see what on a given day people are buying and selling. It's just the orders, but it's mixed.
You expense that?
I do not. Well, it's a personal account.
Oh, I thought you just did it for the reporting.
No. I do now expense a premium X account though. That was a recent addition. So
nice, good.
Small wins.
Redo
Oh, okay.
won't mind.
The big, the small wins matter. Do we know why it didn't last longer? Is this just basically weren't as many shorts out there? Is that why the meme stock rally was a hot minute?
It's a really different backdrop. So not only do you not have people stuck at home looking for entertainment, flush with stimulus checks, short interest is about 25%. It used to be north of 100 back in the peak mania. A lot of, again, the buying and selling that we saw Monday and Tuesday seemed to have Wall Street's fingerprints. So it never really got retail traders back in like back in 2021. And also you had a quiet Monday and Tuesday session ahead of the inflation data on Wednesday. And then you add in the fact that investors, retail traders probably bought in and were sitting on big paper losses. So you provide an exit ramp for them. Why would they not take advantage of it?
Did Bill Gross make money on this with his straddle?
He still is. Those expire today. I haven't talked to him since he laid out the initial trade, so he might have closed it or tapered it down. But that straddle still is very much in play and in the money, assuming shares don't.
So he bought calls and puts at $40, right?
He sold. You logged in, so now I'm off the terminal.
Oh. Wait, you were using my login?
I sat down where you were
sending messages to people under my name.
Off go.
There's a certain person, a morning anchor, that leaves his Twitter account open.
He does.
Oh, I find that helpful.
Yes.
Actually. I know what all those people are talking about.
I want to go to another area here. We were just talking about Reddit and how that was such a great IPO, and they had some good news today, popping the stock up again here. We have a number of really good IPOs performing over the last couple of months. I got David Solomon up on stages saying the backlog's building. Where are all my IPOs? I need to see 5 or 6 a week.
The backlog has been building for 3 years at this point.
Yes.
Every banker you talk to is like, the backlog's been better than it's ever been. Yeah.
I want to see days when we have 4 printing, like on a Thursday.
Yeah. Well, don't hold your breath.
So what are we waiting for here at this point?
Well, the real thought is drawing back investors. So you have Reddit performing well. You have Astera Labs, Viking bougie cruises, for lack of a better frame, all performing well. But you have to get deals that are priced well, to Paul's point, make the investors money, make the sponsors happy, and perform well. And that's really still kind of weaning back into the system. There is still uncertainty around how much of a slowdown will we have in the summer just because bankers and investors are on vacation. We do have an election in November. It seems like we will have a more active than usual June, July than historically speaking. But the big focus still is on that post-Labor Day window, which will be kind of compressed because you want to get out before the election, but also when people are actually at their desks and you can go visit T. Rowe and Fidelity and have a real pitch.
There were days back in the day when Morgan Stanley, Goldman Sachs, us at Credit Suisse or Salm, we'd have to get on the phone and say, all right, guys, we're all going to be in New York on Thursday. We got to coordinate this. All right, you do your lunch at the Four Seasons 11. I'll do mine at the Intercontinental 12. You do yours. That's how busy it was, you know, and because you get those windows. And I feel like this could be a window.
And when I talk to investors and bankers, the big argument that they make is the window has always been open for good companies.
Right.
It's just that good companies who have access to the private markets maybe don't want to go out just yet and be the first
But
or
I also
second.
hear, I mean, these PE guys whining how they've been sitting in these things for 5, 6, 7, 8, 10 years. They're looking for an exit. Well, like, okay, if you don't want to, like, you know, if you don't want to take the streets mark, then let's hit it. Let's go.
Well, that's the big issue.
Oh, I don't want a down round.
You have to call it a down round. You have to cave a little bit on valuation, especially because to your point, a lot of these PE assets are heavily straddled with debt. And investors don't want debt right now. They want clean stories that can be sold to them. Viking was one that's interesting that has a large debt log, but it's viewed as kind of being recession-proof because it's wealthy people, older people taking cruises.
Interesting. You just did a flex there. Paul did a flex.
I just pointed at myself before.
Wealthy people taking cruises. All right, Bailey, thanks a lot. Super appreciated. Happy weekend. Bailey Lipschultz joining us. IPO market as well as the meme stocks. Just some breaking news that we had here. Hess investor D.E. Shaw is abstaining from a vote on a Chevron takeover. So here's the backstory. Chevron's trying to buy Hess. Exxon's in there trying to prevent them from doing that, calling it a right of first refusal. Exxon and Hess share with CNOOC a joint asset in Guyana, and that's the prize crown jewel. We've had a couple shareholders like Institutional Shareholder Services as well as HBK Capital Management. They're going to also push back and not participate in this vote. I still hear like the deal's going to happen.
I don't know. I go to you. I'm so confused by this deal because you've got the investments here and there, but it's Hess, the Hess toy
It's
truck.
Hess.
I'm all over it.
Yes.
Hess investors advised by Glass Lewis to approve Chevron deal.
Right. So they're just abstaining from the vote, maybe because there's more risk, maybe pushing back to try and get a higher price out of Chevron to compensate for the risk. The deal obviously getting pushed back because of arbitration between Exxon and Chevron, and it all hinges on the contract of the right of first refusal. Typically, if Chevron was going to buy just a Hess asset, that would be one thing, but they're buying the whole company, and usually that it makes it a different story because it's not just about Guyana. Did you all get that? Does that make sense?
The lawyers are making money. That's my
The
takeaway.
lawyers are making money. It is very confusing. Coming up, Joe Mysick. Bam. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by BNY Mellon Insight, June 4th to the 6th in Nashville, Tennessee. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. The S&P 500 index, NASDAQ 100, and the Dow, little changed. Even with Thursday's pullback, all three major indexes are on pace to close at weekly highs after notching individual milestones. Today, mostly a story about some of the individual shares on the move. GameStop, for instance, that's tumbling through its third day of declines. The company saying it may sell up to 45 million shares. That further pairs the meme-fueled rally. GameStop right now is down 27%. And Reddit shares, they're jumping after it announced a partnership with OpenAI to bring its content to the popular ChatGPT chatbot. And those shares right now are up 12.25%. Overall, S&P 500 up just a point, 52.97 on the index. The Dow Jones Industrial Average 18 points higher. That's at 39,887. And the NASDAQ 100 4 points higher at 18,562. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus with Joe Mysak.
Today's Focus on Munis is brought to you by Build America Mutual. Build America Mutual insures U.S. municipal bonds that finance essential American infrastructure and provides guaranteed income to improve any portfolio. Be part of Building America. Invest in BAM.
BAM.
BAM. Insured bonds. Our good friends at BAM. Joe Mysak, editor, Bloomberg News, covering all the municipal bond markets since the beginning of time. You got some news for us, Joe, that you want to share?
Do I?
What do you got for us? I mean, are we talking about this? Is this public information?
Sure. I was at a, well, I'm a little hoarse today because I was at a celebratory dinner last night.
Nice.
For retirement.
You're retiring?
Retiring at the end of June.
Congratulations.
Can you imagine that?
Oh, my God.
43
Why would you want to leave this? Why would you want to leave us?
Yeah, why would you want to leave this Friday segment, if nothing else?
I know. 43 years covering the municipal bond market.
You've been covering munis for 43 years?
Yes, single-minded concentration.
He's the source. He's the go-to. And how many people has he trained, do you think?
lot.
25 years at Bloomberg News.
Do you still find it fun talking about munis?
Is it fun talking about munis?
Yeah, for that long.
Are you kidding?
Of course. I mean, cocktail conversation, if nothing else.
Totally.
Right.
Remember Bond Buyer?
Yes.
That's where Joe started. Well, you were there for a little.
I was there for 13 years.
Yeah,
13
Bond Buyer.
years.
Imagine having a publication in Bond Buyer and picking it up with great enthusiasm. That's how you did it back in the day.
Joe was one of the stars there.
And Joe, this thing came out, and I was like, I can't wait to talk to Joe on this. New Jersey's American Dream Mall, they got a boost as first quarter sales soar, I say. So this American Dream Mall is right across the river from Manhattan in New York City. Monster thing right by the Meadowlands.
You pass it.
Everybody passes it.
Right.
This is the thing that has like a roller coaster in it?
It's got the ski slope, the whole thing.
Everything.
But boy, has it been a tough to finance this thing. Talk to us about the bond market and what's happening there.
Oh, man. Neil Callanan and Martin Braun had an interesting story this week based on a municipal bond filing. And it turns out that revenue is up. Sales rose 27% to just under $148 million. But, which is, as you say, fabulous. Wow. But the key line there was added by Martin. Quote, while sales are picking up, they remain off the pace of the nearly $2 billion that a 2017 study projected the mall would bring in during the first year of operations. Wow. So, still flagging somewhat.
And the reason we care about this in the municipal bond market is 555 Group, the mall's owner, borrowed about $1.1 billion in the municipal bond market to help finance the $5 billion project back in the day. So, they got some work to do to make these bonds whole.
Yeah, they do. But, you know, they're getting more different stores,
I kind of like to make fun of it because, folks, it's in literally the swamps of Jersey, right next to the Meadowlands. It's not the most inviting place, and I'm a New Jersey native, but to build a mall, and the projections they had were just...
And it's not easy to get to.
It's not easy to get to.
You know, it makes sense. Like, the idea makes sense. So I'm just wondering why it's not delivering.
It doesn't.
It doesn't? Okay, tell me.
As driving past there my whole life, I'm like, that is the last place I think I'd want. Super duper congested. You got highways all over the place. Where do you park? I mean, just the thought of driving in that part of the world, is for most people, you barely stomach it because you're going to go see a Jets or a Giants game or Springsteen or something like that.
This is true.
Taylor Swift.
Yep.
But I take the train. I won't even drive there.
And then you're not going to like shop and then take the train back because you got all the bags.
Oh, right. So would I buy a municipal bond supporting this?
Right.
And when this happened, Joe and I were talking about it when this was happening back in the day. All right. So what else you got going on in the municipal bond market? Is this, which may just seize up when he retires? We're not sure. We're going to have to see how that goes.
Seize up.
Yes, heavens. Exactly.
Well, we carried an interesting story this week by Lauren Coleman Lochner, who sits a couple of desks away from me. But convention centers, one of my favorite topics.
I'm with you.
It's more, we saw a couple of convention center deals coming back because that business is almost back to its pre-pandemic highs. And, on the one hand, you're skeptical about convention centers because you just sit there and say, wow, these things, they cost, a couple $100 million to build. And you wonder, are you going to get enough business? Are you going to get enough meetings? On the other hand, convention centers are one of the few ways municipalities can stir up economic development.
Yeah.
So, it's like, okay. And the idea behind them, the essential idea is that the convention center revenues there are almost irrelevant. Yes. You don't care. Like, here, come to, hold your meeting at our convention center. We'll give it to you for almost nothing. But the idea is that you're going to have these hundreds and sometimes thousands of visitors who are going to be in your hotels and your restaurants and going out to your museums.
Well, here's my question.
Games.
If we don't do office stuff anymore, why do we still do convention stuff?
The argument is conventions are even more important because you're not getting as much office time. And so...
Is that real or is that just a narrative?
I think it's real. So when I was up in Boston last Thursday for the BCG Expo, they held it in the Boston Convention Center. They only needed a couple little rooms, so that there was nothing big going on there. But I got lost. And I asked somebody for help, and it happened to be the dude who runs it. So he walked me and showed me where to go. And during this little conversation, I asked what I always ask. How's business? And he says, we're back. We're fully booked.
Wow.
We're back, and we're looking good. We're putting money back into this thing. But I've now realized, how you differentiate these is the food. So they have really upped like the food game. It used to be really bad, but now they've upped the food game. That's what this guy was saying. They said that's kind of the new
reporting.
Yes,
I love this.
He says it's not so much about having the latest bells and whistles. Now it's food. That's kind of what we're fighting over now. So anyway, but again, what was adjacent to this Boston Convention Center? The Westin Hotel.
Yeah.
Literally thousands. They had a meeting there.
Yep.
Thousands of people walking over to the convention center all one time. So it all ties together. And then of course, the convention capital of the world, Vegas.
Oh, yeah. Way out in front. Way out in front.
Yep.
What else you got?
So, conventions, and then let's see. So far this year, we're at about 170 billion. That is up almost 35%, which is shocking.
Yeah. What's about that? All right, here's the story I like. Again, Martin Braun and Shruti, I don't know, Shruti Singh, I'll just go, I don't know about the middle name. John Miller's new high-yield municipal bond fund has amassed $1 billion in assets in just under 5 months, drawing buyers eager to invest in the riskiest segment of state and local government debt. Well, that sounds attractive to me.
Oh, yeah.
Yeah.
Well, Miller is for, as they said, 30 years at Nuveen. The Nuveen High Yield Fund is one of the benchmark names, really.
Duke University guys.
Specializing in nutty deals. And there are certainly, they have come back. We are seeing more nutty deals come to the market.
Wait, do we like this or do we not like this? Is there a signal here I should be taking from that?
Do we like it? Yeah, I think we do. And, what happens is we've seen project finance return to the muni market with deals like the convention centers, for example, certainly hospitals, charter schools.
Well, he's got, look at these 2 big positions in this fund here, or is two of his favorite credits are Brightline, the rail line between Miami and Orlando.
Oh, yeah.
That's the first newest U.S. private passenger train built in the U.S. in more than a century. He also holds bonds that finance a casino in New York and an Arkansas steel mill. That's according to data compiled by Bloomberg. So he's not afraid to take some of these risky trades.
Sifting through the
This
rubble.
is what you pay a fee for somebody who's got an eye to find these types of things.
Yep. So
I am so impressed at Paul's excitement and ability to talk about munis in such an intelligent way.
Tax-free income. What's not to love about that? Especially when you live in New Jersey or
High
New
tax
York.
states.
I mean,
even you
Brooklyn
I get
kids
that.
should be thinking about it. All right, Joe.
Hold it. That's it?
That's it.
You got 30 seconds, man. We got a break.
Yeah, it's Thursday. And so we got you to the end of June, right?
Yep.
All right, so
I'll be back.
We got time. He'll be back. All right, that's our good friend Joe.
So I
Mysek,
could
who
say,
covers-
and guess what? That's it.
And that's it. When you're done, that's it. All right, Joe Mysek covered all the muni bonds stuff for Bloomberg News, doing it for like forever. I mean, he was financing ancient Rome, doing those bonds back in the day here. S&P 500, Dow, NASDAQ, all unchanged. We're going to have more coming up. But with our news in New York City, here is Michael Barbie on the pole.
Thank you very much, Paul, Alex, and John. Masters champion Scotty Scheffler was arrested this morning on his way to the PGA Championship. Scheffler was handcuffed as he was led to a police car. He was arrested for second-degree assault of a police officer. Police say a pedestrian was fatally hit by a bus on the road leading to Valhalla Golf Club before Scheffler even arrived. ESPN says Scheffler drove past a police car and was chased down and cuffed. Scheffler's attorney, Steve Romine, spoke to WLKY.
Fatality down the road, and that had changed the traffic patterns, and he was unaware of that. And, I think the officer that was directing traffic was maybe not part of the event traffic detail, and so that's where the miscommunication arose, and that's why we're here.
Scheffler was booked, released, and arrived at Valhalla at 9:12 a.m. in time for his tee-off. Meanwhile, Xander Schauffele, who tees off this afternoon, leads at 9 under. Today, we will broadcast live play-by-play after the U.S. markets close on Bloomberg Radio and all through the weekend. The people of Houston are assessing the damage caused by last night's severe storms that left 4 people dead. Houston Mayor John Whitmire says the city is in full recovery mode after high winds, torrential rain, and even twisters blew through, leaving about 900,000 without power.
A storm with 100 miles per hour winds, the equivalent of Hurricane Ike, considerable damage downtown.
Mayor Whitmire has called for all non-essential workers to stay home. Slovak's defense minister says the country's Prime Minister Robert Fico has undergone another operation after he was shot on Wednesday and remains in serious condition. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages on track for their longest streak of weekly gains since February. You have 6 of the 11 major industry groups in the S&P 500 higher right now, being led by energy as oil prices rise. Consumer staples, that's the biggest drag right now. Strong corporate earnings, they've also fueled the gains with a focus now shifting to next Wednesday, and that's when NVIDIA is going to open its books to investors. Right now, GameStop shares, they're tumbling, plans to sell 45 million shares. They're trying to take advantage of the recent hike in the stock price. GameStop shares today down 27%. Could be it for the meme stock rally. Katie Kaminsky at Alpha Simplex continues to worry, though. She's worried about inflation in particular.
Right now, we have to worry about the impact of inflation, and that's precisely the risk that you saw manifest itself in April. I know we've already forgotten about it after this week's big rally, but the truth is the key risk that we're facing is more that inflation is really causing stress in our system.
And look for some volatility, about $3 trillion worth of options set to expire today. S&P 500, 2 points lower, 52.94 on the index. Dow Jones Industrial Average, that's down 2 points right now. And the NASDAQ 100, 11 points lower. As for treasuries, the benchmark 2-year yield is up 1 basis point. That's at 4.80. The 10-year right now, 3 basis points higher. That is at 4.40. Let me check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. Appreciate that. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We cover all the top news in economics and finance through a lens of our Bloomberg Intelligence analysts. They cover 2,000 companies, 130 industries worldwide, and there's about 400 of them, and a large chunk of them actually cover ESG. So let's rewind to about 4 years ago, middle of COVID. Everyone was talking about ESG. BlackRock was talking about allocating a bunch to ESG. This was where all the money was supposed to be flowing. A new report from Shaheen Contractor, she's Bloomberg Intelligence Senior ESG Strategist, says that liquidation of U.S. ESG ETFs reached almost 30% of all closings so far this year and could continue amid some slowing flows, particularly if the backlash we've now seen in the U.S. on ESG continues. Shaheen, great to see you. Thank you for joining in studio. So I guess let's take a step back for a second. In ESG, it's environmental, social, and governance, right? Where did that go so wrong? Like, how did we get from 2020 to here?
So Alex, just to paint a few numbers, in the first quarter, we saw about $4 billion in outflows. I mean, compare this to 2021, which is about, I want to say, close to $50 billion in inflows. Wow. Now, I wouldn't call it where we went wrong. I think what we're seeing today is slowing flows because, the market is maturing. But at the same time, these outflows that we're seeing, they're very concentrated to a few funds. So actually, I'll repurpose. Where we went wrong is that whole rise in assets was very concentrated to a few funds and a few investors. So it's very noticeable when that comes out, and that's what we're seeing.
So who are those investors or those investor types, and why are they pulling their money out?
So one example is ESGU. It's the iShares ESG Aware. It's probably the largest ESG ETF in the world. Last year, it saw about $9 billion in outflows, and we attribute this to model portfolio changes. So, that could be allocative or it could be due to ESG. For example, an investor doesn't want equity anymore. They just want cash. They just, sell out of equity. So whether it's ESG, whether it's not, to be honest, we don't know. A lot of these outflows are also from European investors. I wouldn't attribute that to the backlash.
Meaning that the backlash has been more in the U.S. versus, say, in Europe.
Correct.
Do we need to separate the E, the S, and the G? Separate the social from the governments from the environmental, or at least separate the environmental part?
I would say no. I mean, I know that's an argument, but I still think that ESG is about material risks and opportunities to a particular company. For some, it's E. For some, it's S. So it's going to be very hard to talk about this separately.
To what extent is the environment for flows in ESG in the U.S. versus Europe, or U.S. versus the rest of the world, how are they different?
very different.
Okay.
So again, the US, 4 billion in outflows the first quarter. Your total flows were about 6 billion in inflows. So the rest of it was almost entirely Europe. So Europe continues to sort of, we call
is
it
that
anchor.
because of it's like everything in this country? It's been politicized.
Yes.
Okay.
Well, the slowing inflows is the politics, but the outflows are this concentration. Sorry, Alex.
But I was gonna say, but also, isn't it just that for a while ESG tracked tech because just on a pure E level and S&G, they just have less employees.
Sure.
They, until the data center situation came up, they were just emitting less carbon because they're not industrial companies. They're not cyclical companies in that way. Well, now what?
So, Alex, if you're asking, is this driven by performance because ESG tends to tilt a certain way, I would say I don't think so. I mean, 2022 was a bad year, yes, but last year ESG ETFs were about performing with the market, about 50% beat the market, which is average. But we still saw so many outflows. So it's that concentration from a few funds, not this, mass exodus because of a certain factor.
Okay.
Do we know where we are in that fund flow situation? The folks that have pulled it out, are we near or at or nowhere near the point of that being over? Do we know?
We don't know. I call it a bit of a pause. I mean, unless all this concentration risk unravels, I don't know when we're going to stop seeing outflows. At the same time, we're not really seeing inflows.
So I guess how many products are out there now? And how many products should there be? Rough estimates.
I would say globally, it's definitely north of 1,000. In the US, it's probably north of 500. Again, very roughly.
And these are ETFs, primarily.
These are ETFs. Sorry, only ETFs, and they span across multiple things, right? ESG, gender, climate, clean energy, all these different themes. How many should there be? I don't know. And I would say, Alex, that's a little bit of a reason for these liquidations. There was such an oversupply in 2020 and 2021 that these uncompetitive strategies are shutting down, and that's normal.
So if I'm Will Danoff, portfolio manager of Fidelity Contra Fund, who's done a great job for me, thank you, Will, do those funds, to what extent are they factoring in ESG analysis into their investment criteria? Is it different today than it was 2 or 3 years ago?
It depends. I mean, I think a lot of the conversations are shifting a little bit. You have, dedicated ESG funds. Climate is in the name, ESG is in the name. But then you have these broad ESG integrated funds. And those are always, considering risks and opportunities. What I think has changed is data availability. You have just a lot more data around climate change, around physical risks. So people are asking these more evolved questions around, things that I wouldn't have asked probably either a few years back.
I guess my question always is, until you can financially measure the benefit of a strategy that is focused on ESG, it's going to be very difficult to then make a case for an investor or a CEO of why these strategies matter. 100%. Have we been able to do that yet?
So my research is starting to answer that. So I'm starting to do industry level analysis into what impacts risk and returns. For example, in materials and governance, we find lower drawdowns, so lower risk. We're still to, explore that and expand that. But I will say within the E&S, it's particularly hard because of the limited data historically.
Right.
All right. Interesting.
Yeah. All right, Shaheen. Thanks a lot. Shaheen Contractor, Bloomberg Intelligence Senior ESG strategist. I think at least from my work in energy transition space, there's no carbon price. So you can't do that on the environmental side. Because you can't say, look, you emit this, it costs this. There's nothing concrete that then a CEO can go to the board or go to shareholders and be like, look, guys, this is why I'm doing this. It's a big problem. It's a big problem, yes. And then how to do that. And you have to have everyone agree on it, or else you're doing a cap and trade situation, which is very confusing. You're just going to wind up importing something from, say, China or India, where it has higher emissions, and then why would you pay more for something that's internal? In country. I think that's definitely a big problem. And also, how do you measure success of, say, diversity and inclusion?
Yep.
Is it a straight up numbers on your board, but does that actually materially make a difference unless you're open to their ideas?
Yeah, well, I can talk. Well, in data, you can go to the FA screen for any security, and there's an ESG tab. In addition to income statement, balance sheet, cash flow statement, there's a separate tab for ESG, and that's where Shaheen and a lot of other folks at Bloomberg's Global Data try to aggregate a lot of this data as well to help out our clients for ESG analysis.
I love that. All right, this is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker with a look at some of the company news we're following. Amazon.com has defeated a proposed class action lawsuit alleging it collected voice data from its Alexa-enabled devices in violation of its privacy promises as state law. This comes after a unanimous Ninth Circuit panel affirmed the case's dismissal. The plaintiffs, James Gray and Scott Orton, they alleged in their lawsuit that Alexa captured their voice data to inform the company's targeted advertising. Alexa was spying. A lower court dismissed the lawsuit 2 separate times at a finding that Amazon's privacy notice made it clear voice data would be used for targeted advertising purposes. Boeing executives grappling with canceled airplane sales and related safety crises have already run a gauntlet of angry stakeholders. Well, this week they face their most powerful constituency yet, the shareholders. Investors at the annual meeting today, presenting a different kind of referendum of the company's failed improvement plans since crashes involving 2 of its newest jets killed hundreds about 5 years ago. A part of the pressure comes from proxy voting advisors recommending shareholders vote against board members as well as the CEO pay at Boeing. And finally, this from the Journal. Coca-Cola's new sustainable bottle caps are smacking into some sensitive areas. Leave that to the imagination. In 2021, the beverage giant introduced a design that connected some of its plastic bottles to their caps. This is a test in Germany and Spain. It helps more caps get recycled with their bottles rather than thrown into the trash or on the ground. It also complies with the European Union directive. EU officials are pleased, but soda drinkers say another story. They say it's smacking into their noses, their cheeks, and their lips as they drink.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Friday, everybody. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We are live from the Interactive Broker Studio right here in Midtown Manhattan, and we made it. It is Friday to the confetti. Q or to the confetti, either one. Michael Barr is here with us on this Friday with world and national news. Michael.
Thank you very much, Alex. Paul, John, severe weather tore through Texas overnight, killing 4 people. 80 to 100 mile-an-hour winds hit the Houston area, causing widespread damage, power outages, and multiple structure fires. In a morning news conference, Harris County Judge Lina Hidalgo says about 740,000 customers are without power, mostly in Harris County.
If you are tied into the transmission lines that fell, those huge towers, we've seen them piled down, imagine 10 of them in a couple different places in the county. That can take weeks to restore.
At the peak, 930,000 customers were without power, mostly in Harris County. It's the second severe storm in the region in 2 weeks. Israeli military says its troops in Gaza found the bodies of 3 Israeli hostages taken by Hamas during its October 7th attack. Hamas-led militants killed around 1,200 people, mainly civilians, and abducted around 250 others. Scottie Scheffler, the world's top-ranked golfer, was arrested this morning on his way to the PGA Championship after he tried to drive into Valhalla Golf Club following a fatal traffic accident. Scotty Romines is Scheffler's attorney.
He was going into Valhalla to work out and get ready for his tee time. They were directing traffic. He held his media credential out and was going in like they'd been instructed to, and apparently there had been a traffic accident or maybe even a fatality down the road, and that had changed the traffic patterns, and he was unaware of that.
AP reports a detective was hospitalized after being dragged by Scheffler's vehicle. Slovak's defense minister says the country's prime minister has undergone another operation after he was shot on Wednesday and remains in serious condition. Robert Fico, who is 59, was shot multiple times as he was greeting supporters after a government meeting in the former coal mining town of Handloven. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right.
Hey, can I just bring this one to you?
Can you?
We're data dependent. Fed Chairman Jerome Powell testing positive for COVID-19. He's experiencing COVID symptoms and working at home. Just thought I'd bring that to you.
Thank you.
Oh, I hate COVID. Okay. Thank you very much. COVID loves me, though. Okay, so here, what do you do? You're a Wall Street guy. You work in Manhattan. You go to the Hamptons during the summer. It's kind of what you do, whether helicopter, car, whatever. What do you do if you're on Wall Street South in Miami? Where do you go?
Is that one of the reasons you moved there in the first place? Because it already is like...
Yeah, but now you need a different place.
Oh,
I mean, you can't just kind of live and
just
work
stay put.
in the same time.
You're already there.
Well, apparently, Wall Street South, as apparently it's known, is getting its own version of the Hamptons. A developer, Rafael Reyes, he's owner of the Rockwell Island Development Group, is building an oasis on the Bahamian island of Bimini, 48 nautical miles off the Florida coast, to serve the increasing number of really rich people that call Miami home. Now, apparently, you can take a boat. It would take about 40 minutes. There's a high-speed ferry that should help that along, too. That takes about 90 minutes. You can do a helicopter with a local charter company like HelloFlight. Be there 25 minutes. I mean, boom, you're in. That's the deal.
Now, the big thing is he's going to be, I guess in 2026, a banyan tree resort with the country's first overwater villas, priced from $3,000 per night on a series of 4 man-made islands facing a giant lagoon. You got to have that.
I mean, you got to have a lagoon. What happens with the hurricanes, though?
Yes.
Which they come and do.
Are they going to have overpriced farmers markets selling scones for like $15?
Yes, obviously. So now you have choices, right? Wall Street in New York, you can still go to the Hamptons. Wall Street in Florida, now you're going to have some hope at Bimini.
As I prepare to get on the New Jersey Transit train to take me to the Jersey Shore, and it will take close to 2 hours. Every single stop along we make.
That's good times.
That's how we roll there in Jersey. All right, we got Balance of Power with Joe Matthew and Kaylee Lyons. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The Biden campaign tries to turn the tide. Welcome to the fastest show in politics as Joe Biden works overtime to shore up weakness in his base, beginning with black voters who helped deliver his victory in 2020. I'm Joe Matthew alongside Kaylee Lyons here in Washington. Kaylee, you made it to Friday, and it looks like a working weekend for Joe Biden.
Indeed. Also, surprised, I'm here in the first hour of Balance of Power. This doesn't usually happen, but it's a special Friday treat. And Joe Biden, as we speak, Joe, just down the street at the African American History Museum on the National Mall, addressing a potential weak spot for him with this group of voters. And it's not just with this today. He, of course, yesterday met with family members of the plaintiffs in the Broward versus Board of Education case. And this weekend, he'll be going to Atlanta to deliver the commencement address at Morehouse.
Morehouse, really important moment for him, as a matter of fact. And Kaylee, we've got an opportunity here to try to connect the dots on some of this. We started the week talking about the Siena College poll that really highlighted the weaknesses in his base that we're referring to right now. But of course, the economy as an issue continues to dog Joe Biden in a way that the White House just can't seem to get its arms around. Stuart Paul at Bloomberg Economics, part of the team that crafted a really important story today that highlights specifically the differences between economic conditions under Joe Biden and Donald Trump and why this isn't working with voters right now.
Yeah, he cannot get any good economic news to resonate, but certainly the bad economic news, which also includes the fact that prices are substantially higher than they were when he took office, is what voters seem to be clinging to. And it is some of those economic issues that seem to be resonating among the black vote in particular. You alluded to the New York Times Siena poll. Mr. Trump got 20% of black voters in that latest poll. The highest for any Republican going back to 1964.
Absolutely.
And we're going to have more on that with Don Levy of Siena in just a few minutes.
Perfect timing to have Don Levy with us. That's the number that's been driving this narrative all week, Kaylee. He'll be with us in just a couple of moments.
Yep. First, though, we got to get a check on the markets. Charlie Pellet has that for us up in New York. Happy Friday, Charlie.
Hi, thank you very much, Kaylee. Good to have you on board for the 12 noon hour. We've got the Dow, the S&P, NASDAQ all advancing right now. Let's throw in the NASDAQ 100 index and the Russell 2000 as well. A lot of green on the screen. S&P, by the way, on track for another winning week, the fourth straight up week. S&P right now higher, little changed at 52.29, up 2 points, up less than 1/10 of 1%. We've got the Dow up 37 now, up 1/10 of 1%. 39,905 on the Dow after yesterday's run to 40,000 and beyond. NASDAQ right now up 5 points, little change there. 10-year, 4.40% with a 2-year that's yielding 4.80%. Bitcoin up 3.1% right now, 67,284 on Bitcoin. Spot gold up 1.4% now, 24.10 on gold, 24.10 worth repeating. And West Texas Intermediate crude up 0.4%, 79.53 a barrel. As for what is driving markets, Nadia Lovell is senior U.S. equity strategist at UBS Financial Services.
And I think what's happening is that the soft landing narrative is really reinserting itself, and that's good for its assets because it will allow the Fed to cut later this year. But I think beyond that, it was a very strong earnings season. We just have a handful of companies left now to report, but the earnings season so far, tracking at about 9% year-over-year growth. That's the best that we've seen in 2 years.
And speaking of earnings, next week we will be hearing from NVIDIA. The stock is lower today by 0.9% year-to-date. NVIDIA shares up by 88.8%. A further retreat today for GameStop, down 26.8% after earnings. AMC Entertainment Holdings down now by 2.3%. Recapping, stocks higher, S&P at 5,300 even, up now by 0.1%. Balance of power continues. Back we go to Washington. Joe Matthew, and yes, in the noon hour, Kaylee Lines. That's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Imagine, Joe, Charlie Pellet telling us that the Dow is effectively right around the 40,000 level after it hit it yesterday, dropped briefly below. We're at 39 something now. The stock market could be there, and voter opinion about the economy could be so significantly lower than that.
And we hear, we know the deal here. The stock market is not the economy.
Right, so they say.
But there's also a wealth effect that tends to move throughout the economy when stocks are doing well that can cause companies to hire up, increase wages, and maybe help people downstream. It does sound like trickle down, I guess, when you refer to it that way. But there's more at play here, and there's obviously a great story to tell for, well, Joe Biden maybe. But then it brings us right back to this story from Bloomberg Economics today. We were just talking about it earlier. Stuart Paul and his colleagues crafting a great piece of work here that's part history lesson. I was just talking to Kaylee. I don't know that I could have told you unemployment hit 14.8% in April 20. We lived through it, but it still looks like a typo when I see it. And Stewart writes here, the cumulative increase in consumer prices during Joe Biden's term likely will end up being higher than any other president in the past 40 years. That's what we're talking about here.
Indeed.
And Stewart joins us from World Headquarters in New York. It's great to see you, sir. Great work, and glad to have you. A lot of folks are asking why the president cannot connect the dots, and it seems that you just did.
Yeah, it's interesting. In poll after poll, especially in the swing states, if you ask registered voters who they trust to shepherd the economy along, former President Trump wins in a landslide. It's about a 10 to 15 percentage point difference between Presidents Biden and Trump when you ask voters who they trust to shepherd the economy. And for some who are just looking at some of the headline economic figures, cumulative growth under President Biden is going to be about 11% through this term, right? And that smashes what Donald Trump had at just 7.4%. To your point, it really is the cumulative inflation throughout President Biden's term, which is downstream of the reopening of the economy, a lot of stimulus that had been in the pipeline, and supply chain snafus, which are pretty far outside of his control. But if we end his term, if we end this term with the sell-side forecasts coming to fruition, it'll be cumulative inflation of about 21% during President Biden's term. That compares to Donald Trump's just 8% and to a historic average between Presidents Truman and Obama of about 15.1% per 4-year period. So that's what's really resting on voters. That's what's on their minds right now. And in terms of what it means for the change in the typical voter's lifestyle, we tend to focus on real disposable income growth, even though there's been such robust GDP growth during the Biden administration, during this term. Cumulative real disposable income growth per person is likely to have just increased 2.9% when voters go to the polls. That compares to 12.4% under Trump. So it's really no wonder that voters are looking to Trump as a better steward of the economy.
Well, and Stuart, also when we're considering the much more elevated levels of inflation we have seen during the Biden years, often what we hear from critics of this administration is because of that fiscal policy, all of that spending, all of that money getting dumped into the economy, that's what fueled inflation. Forget about anything on the supply side. But you guys point out in this piece how it wasn't just Biden that was sending out stimulus checks. Those happened during the Trump administration, as well as massive tax cut. And that those things together with moves under the administration are likely what contributed to this inflation. How many years back do we need to look to understand the dynamics of what was driving prices higher, say in 2022?
That's a great point, Kaylee. You know, folks tend to give the current administration far too much credit and far too much blame for what happens under their watch. Yeah, to any extent that the Trump era tax cuts allowed people and companies to fortify their balance sheets and pile up cash that would then be sent out in a sort of rebuilding phase as the economy reopened. Undoubtedly, that contributed. Similarly, the Trump administration distributed 2 stimulus checks. Biden had distributed 1 check early on in his term. And when those checks from President Trump were distributed, the economy was largely shut down to try to prevent the spread of COVID-19. So when there was that reopening, households were flush with cash. Similarly, households had the ability to refinance and at rock bottom rates. And so that's not anything really to do with the presidential administration, but it's the sort of thing that has a long lag in how it creates a buffer that wraps around the economy that can extend pretty far into the future. And we're seeing the effects of that with persistent inflation right now.
Indeed, we are. Stuart Paul of Bloomberg Economics, thank you so much for joining us. It's a great piece. You can check it out on the Bloomberg terminal as well as online. It literally, point by point, Joe, goes through different data points in the economy, what they looked like under the prior administration and the current one. And one thing we didn't talk about was mortgage rates as well under Biden. How much higher they are, and boy, don't want to be homeowners like me know it.
Well, that's a huge part of this. I mean, the home ownership is further out of grasp for young people than it was under Trump, and that is a big sticking point in this story.
Yeah, and of course, we're continually hearing that because of the high rates, that might be something that is actually fueling inflation now because it's keeping mortgage rates higher. People can't afford to buy, so they're renting. Rental prices go up, and there you have that shelter input.
So imagine a world in which we need to cut rates to fight inflation.
That's what
kind of
Rick
where
Reeder
we are.
is arguing today. David Weston spoke with him, and it's definitely an interesting argument. But of course, all of this factors into the fact that we are in an election year and the economy is going to be front and center on the minds of many voters as they are deciding whether they prefer Joe Biden or Donald Trump. And according to New York Times polling with Siena, in the key swing states that ultimately will likely decide this election, in almost all of them, Donald Trump right now is winning. We go now to Don Levy of Siena. He's joining us now here on Balance of Power. He's the Siena College Research Institute Director. Don, it's great to have you back on the show. So obviously, we've had a few days now to sit with the survey data. We know that Trump is leading Biden in almost all of the swing states. We know that Biden is losing support in key demographics, including Black and Hispanic voters, young voters as well. How much of those dynamics are driven by the economy?
Well, voters tell us it's the number one issue by more than a 2-to-1 margin over immigration. Abortion finishes third. Far and away, the economy is the most important issue to voters right now. And as you pointed out, right now, about 3/4 of voters are telling us across the swing states that they think the economy is no better than fair or poor by at least 20 points. In some states, as much as 27 points, they believe that former President Trump is a better steward of the economy than his current President Biden. But one little interesting nugget that you hadn't mentioned in your earlier piece, the first question of the survey that we asked across the battleground states were, how satisfied are you with your life today? We didn't specifically say the economy, we said your life. There, the finding is a little bit upside down. We find that 74% of voters across the 6 battleground states actually, despite the economy, say that they are satisfied with their life today. So there is a bit of a disconnect amongst voters that perhaps gives a little bit of hope to the Biden campaign.
Speaking of hope for the campaign, Don, welcome back. It's great to see you. Everyone should know Don Levy was rated the best pollster in America by ABC News. And I bring that up, Don, because I keep hearing in Washington that the polls are wrong, that the sample's broken, and that Democrats don't actually believe the numbers that we're seeing, despite the incredible consistency through surveys, not only your own, but other branded surveys that are in some cases finding the same results. How do you respond to those people?
Well, we respond by doing our work. You know, coincidentally, I'm at the American Association for Public Opinion Research conference right now. Every single pollster in America is here. I've been talking to every single one of them this week. You know, and by and large, we're getting very similar findings across multiple different methodologies, multiple different ways to reach the public. I'm pretty confident in our numbers right now. That isn't to say that these are going to be the exact numbers on Election Day. But I think, you know, one thing I'll point out, for example, when you compare Biden versus Trump to the United States Senate races, we find that in 4 of the states that we just polled the Senate race, the Democratic candidate for the Senate is outperforming Joe Biden by at least a couple of points, as many as 13 points in Nevada. So voters are not necessarily dissatisfied at present with Democrats. They're dissatisfied with Joe Biden. So I think our numbers are pretty good at this point. You know, the previous attack on us as an industry is that we were underrepresenting Trump voters. So for now, the Democrats to turn around and say it's flipped upside down is certainly their prerogative. But I think right now we feel pretty good about the accuracy of our polls.
Well, Don, it's an interesting point you're making about how you are seeing stronger support for other Democratic presidents, just not the Democratic candidates, rather, just not the Democratic presidential nominee. I guess it begs the question whether that's going to translate into a lot of split ticket voting, or if that's going to translate into a reverse coattails kind of effect and could actually be something that leads Joe Biden to outperform current expectations.
Fabulous question. You know, we're going to have to continue to track it to see. You take a state like Nevada that, you know, amongst likely voters right now, we have Joe Biden trailing by as many as 13 points. Jackie Rosen, the Democratic incumbent in the United States Senate, amongst likely voters, is a break even. Can Jackie Rosen pull Joe Biden along, or will the voters split their tickets? Right now in a poll, they're splitting their ticket. They continue to tell us that they hold Joe Biden responsible for the economy. They're looking for some sort of relief there. Whether he can generate that between now and the election day, whether there's another event, whether it's a trial, whether it's a debate, you know, we're going to continue to track that. But right now, I would bet more on split ticket than I would on the reverse coattail theory.
Huh, fascinating. There was a great story in Politico this week that's keeping a lot of people up at night, Don, about what happens in the world of a tie. 269 to 269. Nobody gets 270. Joe Biden and Donald Trump, neither winning the Electoral College, and this thing goes to the House of Representatives. This is the kind of stuff that gets journalists talking. We can stop down on a contested convention if you want. I'll do whatever you want here, Don, but I wonder if that is something that you see as a plausible scenario that we're going to be talking about in November.
Well, we see it as a possible scenario. Right now, the 3 more southern battleground states, Georgia, Arizona, Nevada, all with sizable leads for Donald Trump. The 3 northern states remaining about a toss-up. We have Biden up in one of those 3 states, Michigan. But assuming that Biden manages to pull off a victory in the 3 northern states, Trump the 3 southern states, then at this point the tiebreaker would be Nebraska 2. So I think it's a plausible scenario that we could have a tie. But at this point, we're going to concentrate on measuring public opinion, and we'll add up the score later.
I just have to say the prospect of a tie as a journalist who will have to
Oh my
work
God.
every day until
Forget
we
it.
figure out who won. That
Cancel the plans for
process
November. It's our job to keep pulling you to that line, Don. Even if you don't want to talk about it, we'll at least try to do our best.
Well, I'm sure that we're going to ask voters about it at some point.
I'm sure that you will. Don Levy of Siena College, always great to have you here on Balance of Power. Thank you so much. And of course, it's not just about the headline figures in the polls. Okay, Trump is leading Biden. It's about who Trump is leading Biden with, or rather where Biden might be losing support, which is to advantage Trump's gain, including Hispanic voters.
Sure, exactly.
Black voters. Young voters, the coalition that Biden is going to need if he wants another term in the White House.
The voters who brought him to the dance in 2020. As we discussed earlier, the speech at Morehouse is going to be looked at very closely. The president just wrapping, I believe, remarks at the African American Museum, one of the great pieces of architecture and sites of history here in the nation's capital. We'll assemble the panel next.
Indeed.
Rick and Jeannie are with us on the Friday edition of Balance of Power on the radio, on the satellite, and on YouTube. And Kaylee's with us in hour one, only on Bloomberg.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
$79.46 a barrel. After earnings, shares of Applied Materials, they are lower now by 0.3%. Recapping, S&P just turning negative, down now by a point. Balance of Power continues. Back we go to Washington. Once again, your hosts, Kaylee Lyons and Joe Matthew.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons in earlier. on this Friday, including some eye-catching reporting, I will say, from the New York Times.
This is incredible. About
Supreme Court Justice Samuel Alito. It's January 2021. January 6th has just happened. An inverted American flag is a symbol at this time for basically those who believed that the 2020 election had just been stolen, and that is what was flying at the Justice's house.
Yes, Alexandria, Virginia, the upside-down American flag, which symbolized Stop the Steal, to Kaylee's point. I saw this image online yesterday, but to read the New York Times reporting, they actually did some work and started knocking on neighbors' doors here. And Samuel Alito, Justice Alito, provided a statement that essentially blames his neighbors and his wife.
Yes.
This is kind of a theme, throw the wife under the bus this week.
Senator Bob Menendez.
Bob Menendez.
Yeah.
Quote, I had no involvement whatsoever in the flying of the flag, Justice Alito said in an emailed statement to the Times. It was briefly placed by Mrs. Alito in response to a neighbor's use of objectionable and personally insulting language on yard signs, unquote. What were those, Biden signs? I didn't get
I think there were some expletives on the signs near the children's bus stop. Is among the things that I read. But yes, apparently it was not the justice, but the justice's wife who made the decision to fly the flag in this form.
Well, this is being seen as a violation of ethics rules, and boy, we've had a lot of those over the past year, so we thought we'd start there with our panel today. Our signature panel on a Friday, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors with us right now. Rick, we've talked about this a lot when it comes to the court, and I wonder what the Chief Justice would think of this. Do we need to have a new conversation about ethics, or this is the Supreme Court being the Supreme Court?
You know, I hope this is not the Supreme Court being the Supreme Court. And as you've pointed out many times, I mean, this institution has been under pretty significant assault, in some cases because of their rulings, but in many cases because of their challenging ethics. I wouldn't say this is an ethics problem, but this is certainly an optics problem. You know, Justice Alito isn't doing anything to help the institution of the court by having his flag flown upside down, which is a sign of distress, and then issuing a statement, throwing his wife under the bus. Maybe something in there about how inappropriate it was to use the American flag in this way would have been something that was a teaching moment for the judge, but evidently not.
Well, it also is important to consider that this sure is something that happened back in 2021 in the days after the attack on the Capitol. But the attack on the Capitol and Donald Trump's role in it is now a question being considered in courts of law, as he's been charged by Jack Smith in the case here in Washington with action surrounding that. And it's up to the Supreme Court now to decide whether that case is going to go ahead or if they give him presidential immunity, Jeannie, or kick it down to a lower court. It's not even just about whether or not it raises an ethics question broadly, but isn't this a live issue right now that Justice Alito is having to consider? Should he be able to do so?
Yeah, I mean, we've heard plenty of people who have called for not just Justice Alito, but Justice Thomas and others to recuse themselves from various cases. Of course, given the way our courts operate, that is up to the justices of the Supreme Court to make that decision. But in this case, this is very, very troubling because, of course, at the time that this flag was displayed, they had cases before them about the January 6th, the 2020 election, rather, of which the January 6th grew out of. And, for Justice Alito to blame his wife, it raises all kinds of questions. We also had Ginny Thomas involved. So this is something at a time when people's respect for and trust in our institutions, particularly our courts, is taking a beating. We have the Speaker of the House down in New York City talking about a judge and the New York courts. These attacks are problematic. People's sense of the legitimacy of the courts under questioned. And when you hear a story like this, it makes you question further, are these justices making decisions based on law or their own personal political preferences? And that's something that should never happen, particularly in the Supreme Court.
Tom Nichols on Twitter tries to compare this, Rick, to the way we might feel or the reaction that might be had if Justice Sonia Sotomayor, of course, a liberal justice, said, well, my husband flew an anarchist flag because people were getting him upset. This is not normal, he writes, and we should not accept it as normal. Is flag etiquette still a thing, Rick? We're talking about ethics in the Supreme Court. What about patriotism?
Yeah, no, I think there should be flag ethics or etiquette, as you say. Look, I mean, Jeannie touched on it. I mean, this is an institution that's under distress. All our institutions are under stress. These people who have lifetime appointments to the Supreme Court really are responsible for the institution's goodwill with the American public. And if they lose that goodwill, they undermine their ability to implement the laws that they see in front of them. And so
right.
I really worry about this kind of behavior because, look, everybody has their own political point of view.
That's true.
That's for sure, right?
Rick Davis and Jeannie Shanzano, our signature political panel, joining us on this Friday. Thank you so much. Coming up in just a few minutes, we'll have an interview between David Rubenstein and Homeland Security Secretary Alejandro Mayorkas right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
As we make a run for the border on the fastest show in politics, welcome to the Friday edition of Balance of Power here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington, standing by for a critical interview on Bloomberg today, Kaylee, that gets to one of the most important issues that will decide this presidential campaign in November.
Yeah, the issue of the border and migration over it. This is something that the Department of Homeland Security has been grappling with under this administration, most notably its Secretary, Alejandro Mayorkas, who is about to sit down with David Rubenstein here on Bloomberg Television and radio. He, of course, is the host of peer-to-peer conversations. They're going to be speaking at the Economic Club here in Washington. And, of course, this is just a matter of weeks after the effort to impeach Secretary Mayorkas died in the Senate after the House had indeed voted to impeach him over what they see as him not adequately doing his job, even if he is just enforcing the policies of this administration.
He's had quite a year to be impeached by the House on the same day that he was testifying to the benefit of Joe Biden in trying to sell the new budget plan that had just recently been delivered. It's remarkable. Once the articles went next door to the Senate, that was the end of that story. And now, obviously, you've got a cabinet secretary who not only just made history here, but is tasked with an enormous lift in trying to solve this problem at the border, and a president prepared to take executive action.
Yeah, already we have seen Joe Biden making some tweaks on the margin in regard to asylum. The question is, are we going to see more decisive, perhaps more sweeping action, as he knows that this is an issue dogging him as he campaigns for re-election? So we want to go to our political panel now. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, are with us as we await this interview with the Homeland Security Secretary. Jeannie, obviously we already have seen some small moves from the Biden administration on the border, but now that we're 100 days out from the bipartisan deal he negotiated with members of the Senate, which died very quickly after that deal was made, does he need to be doing more here?
Yeah, I think he does. And I applaud the president. I applaud Chuck Schumer for moving forward. The reality is Congress should have passed that agreement. It was, by all accounts, the toughest border security deal that we've seen in 100 years. And the fact that it was thrown out for political reasons because they didn't want President Biden to get a bill passed on immigration this year is just a shame. And so the president not being able to rely on Congress has to go it alone, and Chuck Schumer has to try to move forward. And I would also say President Biden politically needs to juxtapose his plan on the border with his opponents, because Donald Trump's plans as it pertains to the border, which are becoming very clear at this point, are going to be something that we should be talking about as they seek to deport millions of people seeking asylum in the United States.
Well, of course, we're going to hear a conversation about more than just immigration policy and border security, Rick, but this is an issue that hits close to home for you, something I know when it comes to comprehensive immigration reform. You came closer than just about anyone in your work with John McCain. We saw, obviously, George W. Bush make efforts that always brought this right up to the line, but never actually became law. And together we witnessed what we're already talking about here, this comprehensive deal, once again on immigration, that was struck in the Senate fell apart. What are you going to be listening for in Alejandro Mayorkas to get a sense of where this debate is heading in the year ahead?
I think that he's got plenty of ammunition to really try to galvanize some support around another shot at the measure. I've seen today reports that Chuck Schumer's looking to take that bill back up and just remind everybody, maybe take another vote in the Senate. It passes there, forces the House to deal with it. I'd love to see the president, as part of this sort of border week that seems to be brewing, make a statement that the first thing he'll do, if reelected, is to reinsert this border security provision that Jeannie was talking about and into Congress, get them to pass it and sign it into law. Make it a top priority. He hasn't really embraced the border debate, and I think this would be a great week to see him march out there and make a statement like that. Somebody needs to explain to him that his administration is going to be graded on the future, not just the past.
It's a fair point, Rick. Obviously, we have seen Joe Biden recently take a trip to the border. He actually did so on the same day as Donald Trump, about a few hundred miles apart from each other down in Texas. Jeannie, does he need to go there again? How frequently should he be at the site of the issue in this campaign cycle when he's spending a lot of time in swing states?
I keep hearing from people at the border, it's not necessarily that they need politicians down there to get cameras down there and stand there and show that they are, somehow addressing the problem. What the president needs to do is, if he cannot get Congress to act, and we know that that's not going to happen this year, then he needs to do what he can do legally, constitutionally, but do it unilaterally. And I also think he needs to assure the American people that security is his #1 focus, as is a humanitarian, comprehensive immigration policy in the United States. I'm in New York City. Like so many cities across the country, particularly blue, we've had an influx of immigrants who have come up, and they are making a real challenge for these cities as it pertains to education, healthcare, housing, and the economic impact of that is real. So those are things he needs to do. And I also applaud those who say, let's let immigrants and asylum seekers work in this country. We have jobs. Let's let them fill those. So there's a lot the president can do. I'm fine if he goes to the border, but I don't think we need any more photo ops at the border as much as we need action by Congress in particular, but barring that, the president.
Jeannie Sheehan Zaino and Rick Davis, great conversation. We thank you to help us set the baseline for this important conversation that we're about to bring you now. Kaylee, this is happening at the Economic Club right here in Washington, D.C. As we mentioned, our colleague, David Rubenstein, Carlisle co-founder, host of Peer-to-Peer on Bloomberg Television, sitting down with Alejandro Mayorkas, as you can see right now on Bloomberg Television. Let's watch and listen together.
Chair of our Homeland Security Advisory Council in the Department of Homeland Security. And the jewel thief that I am, I just stole Matthew Ferraro from the law firm to join us and be a senior counselor on matters of technology.
Okay. Well, let me talk about the elephant in the room, because you were the second secretary in the history of our country to be impeached. What was it like living through that impeachment process? And is it finally over now?
To the best of my knowledge, it's over. So, quite frankly, I have said publicly a number of times that I did not allow it to distract me. That was actually sincere. I focused intensely on my work throughout. In a week where it was an issue of greater prominence in the life of the department, I might have spent 20 minutes on it. I really just focused on my work. It had its impact on loved ones.
So it's behind us now. Though, as Will Rogers once said, and paraphrasing him, the country's never safe as long as the House is in session, right? so you never know, but may never come back, right?
One would hope not.
Okay. So let's talk about the border. It appears that there are a lot of people coming in over the border. This is obviously one of the subjects that people wanted to impeach you, or some people wanted to impeach you over. Is it really that we're getting more people coming in over the border illegally, or is it just the appearance of that?
Oh, no. The number of encounters at the southern border is very high. But it's very, very important, number one, to contextualize it, and number two, to explain it. From a context perspective, the world is seeing the greatest level of displacement since at least World War II. I think the recent report was that there are 73 million displaced people in the United States. And so the challenge of migration is not exclusive to the southern border, nor to the Western Hemisphere. It is global. And when I speak to partners across the Atlantic, it's the first issue that they raise, the first challenge that they
What is the
discuss.
reason for that?
So, well, one has the customary reasons of displacement: violence, insecurity, poverty, corruption, authoritarian regimes, now increasingly extreme weather events that propel people to leave. Why are we experiencing what we are? It is for those very reasons why people leave their countries of origin. We also, remember, in our hemisphere, we overcame COVID more rapidly than any other country. We had, in a post-COVID world, 11 million jobs to fill. We are a country of choice as a destination, and one takes those two forces, and then one considers the fact that we have an immigration system that is broken fundamentally, and we have a level of encounter that we do. And when we speak of a broken system, let me just capture that as succinctly as I can. The average time between encounter and the point of final adjudication of an asylum claim is 7+ years. Approximately 70% of the people who meet an initial threshold for asylum, the credible fear standard, about 70% qualify. And so they stay for 7+ years. And the ultimate adjudication, about 20% qualify. That's quite a disparity, but people in the meantime leave, are able to stay, sometimes have children, U.S. citizen children, attend our schools, attend our places of worship, but integrate in the community.
Right, okay, I understand, but why wouldn't somebody who's coming in illegally always say they're seeking political asylum? Because based on what you just said, they're likely to be here for 7 years. Why not just say, I'm not smuggling drugs, I'm just a political asylum seeker? Why doesn't everybody do that?
Well, let's separate drug smuggling from migration. David, the fact of the matter is that we have an extraordinary number of people claiming asylum and a greatly reduced number of people qualifying for it. The reality is that people do claim asylum when, in fact, they are fleeing poverty, generalized violence, and that does not an asylum case make. But the initial threshold for an asylum case is low and purposely low. And one of the things that the bipartisan legislation would have done is would have raised the bar.
All right, so in our country, if somebody seeks political asylum and they legitimately need political asylum, is it our law that they automatically get it if they have legitimate needs? There's no quotas or anything on how many people we can accept for political asylum?
There is no quota on the asylum population, and one just has to persuade a judge.
So you've been Homeland Security Secretary under President Biden from the beginning of the administration. So how many people would you say since that time have come in over the border, the southern border, let's say illegally, seeking asylum, they're bringing drugs, they're whatever they're doing?
I do want to differentiate because we're in a political environment that demonizes individuals encountered at the border, and there's a vulnerability to painting with a broad brush people who are fleeing and coming to the United States. And so I want to separate, and I will be incessant in this, separate drug smugglers from individuals seeking asylum, or even if they don't have a basis to remain in the United States, seeking a better life.
Okay.
And so the number of encounters have been very well published this past month. We had about 134,000 encounters
This past month, but let's say since the beginning of the administration, is it millions of people?
It's several million people.
The perception is by, I guess, some Republicans in the House side, perhaps maybe others, that more people have been coming in under President Biden than under President Trump. Is that true or not?
That is true. Now, in 2019, there was almost 100% increase in the number of encounters at the southern border over 2018. The situation in the hemisphere was propelling people to leave their country. 2020 was a period of tremendously suppressed migration throughout the hemisphere and around the world because of the COVID-19.
When people coming over the border illegally in the southern border, what percentage of them are really drug smugglers?
The majority of fentanyl, over 90% of the fentanyl smuggled into this country is smuggled in passenger vehicles and commercial trucks traveling through our ports of entry.
So it's not people carrying it on their body?
It is not people carrying it on their body.
Okay. What about people who are hired, who want to get a better life? They hire people for money to get them across the border. Is that a big problem as well?
So let me go back and make one other point about the ports of entry. The majority of people arrested seeking to smuggle fentanyl into the country through commercial trucks and passenger vehicles are United States citizens. So
what do you do with them?
So well, they're arrested for drug smuggling, and under Title 21 of the United States Code, they're prosecuted. So with respect to your question about, people coming across the border, what we need fundamentally is a reformed system, a legislatively reformed system. We are in 2024. The world has changed. Our immigration system was last changed in 1996. We're in a different world now.
Well, there was legislation that was developed, I think, in the Senate, bipartisan legislation, and it got stalled, let's say, in the House. Would that have solved our problem had it passed?
It would have been a transformative change in managing the number of people we encounter.
Well, what was the main thing that would have been in that law that we don't have now that you would have liked to have?
So we would have taken a 7+ year time period between the time of encounter and final adjudication and reduced it to as little as 90 days. And that changes an intending migrant's risk calculus. Because if they know that they can stay for multiple years and work and make more money than they can, and safely so, than in their country of origin, they will decide to make that journey. If they understand that they have to pay their life savings to a smuggling organization only to stay for a matter of weeks, that is a very different risk calculus. And one of your prior questions was, do they pay people to assist them? The world of migration has changed dramatically over the last even 15 years. We're not dealing with the coyotes that I dealt with as a federal prosecutor, where they smuggled 2-3 people at a time. We're dealing with extraordinarily sophisticated smuggling organizations in a multi-billion-dollar industry that is also international.
But that industry, is it one designed to bring drugs into the United States or designed to get people to come to the United States for which they get a fee?
It is the latter, but what we are seeing, and it should be unsurprising to everyone, that we're seeing a, not quite a merger, I would say a synthesis of transnational criminal organizations and the smuggling organizations. There's so much money to be made.
And fentanyl is coming from China, is that true?
Well, China is a primary source of precursor chemicals and the equipment used to manufacture fentanyl.
How does it get over from China to, let's say, Mexico?
It is shipped to Mexico, and it also comes domestically to the United States and follows various transit routes, and which is why I engaged with my counterpart from the People's Republic of China to address this fact.
The people who are now coming over, are we separating families? In other words, under the Trump administration, there was a lot of controversy. Children were being separated from parents. Is that happening now or not happening?
No, that was a deliberate practice to deter families from reaching the southern border, was the separation of them. That was condemned across the board. Cruelty is not something that is an instrument of a value-based country, and we eliminated that practice. Actually, it was eliminated, in all fairness, towards the end of the Trump administration. We issued a policy preventing it, and we actually, the president created a family reunification task force that I chair that is actually reuniting separated families.
Okay, so President Trump campaigned, when he first campaigned for president, on creating a wall, and I guess some part of the wall was built. But would not a wall have helped somewhat if we had a big wall? Would that not block people from coming, even though people like to make fun of the wall and it's expensive? Wouldn't it not have had some impact in reducing illegal immigration?
So, look, in the 21st century, I wouldn't necessarily propose cementing bollards on the ground and constructing an immovable wall, given the dynamism and the rapid change in migratory patterns. But I just have to quote Secretary Napolitano. You build a 20-foot wall, they'll build a 21-foot ladder. And we see breaches of the wall all the time. We're seeing the corrosion and collapse of the wall in other places. But people breach physical barriers. It requires a much more comprehensive approach.
So why wouldn't people come over the northern border? In other words, somehow come out, nobody seems to be monitoring the Canadian border that much, I guess. So isn't it easier to come into the country illegally through Canada?
We monitor the northern border of the United States. U.S. Customs and Border Protection. Some of the terrain is very difficult to traverse. We have a different legal structure with Canada. We have a safe third country agreement with Canada, and the reality, and Canada also has different approaches to migration into their country than do some of the countries in Latin America.
If you wanted to come into this country illegally, let's suppose we want to come in.
Let's say if one wanted to come in.
If one wanted to, what would you recommend to that one person that they do about the best way to get into this country illegally?
I would caution them and encourage them to apply for a visa. And if, in fact, they seek humanitarian relief, to actually avail themselves of the lawful pathways that we have established so that they don't risk their lives in the hands of smugglers.
All right. What percentage of people die trying to get into this country? They're shot by somebody or something?
I don't know, David, a percentage, but I will share with you, having spoken to families who crossed the Darien, the area between Colombia and Panama, the suffering and the trauma is extraordinary.
So what is the country that is sending the most people illegally over the southern border? Is it Mexico, Colombia, Venezuela? Where are they mostly coming from?
It varies. It varies from time to time. I would just say that the population right now, demographically, the population of individuals whom we are encountering at the southern border, in between the ports of entry, predominantly right now Mexican.
Mexican, okay. So let's suppose the legislation that didn't pass, maybe eventually it'll pass, but until then, can you not administratively do things that was in the legislation, or are you already doing those things?
The legislation did a number of things. The two pillars were It gave us the legal tools, statutory tools, to vastly accelerate the adjudication of claims for humanitarian relief. And that means we could remove people more quickly who do not qualify. And quite frankly, we could give protection with finality to people who do, much more rapidly. And it resourced us to effect that dramatic change. We were talking about a piece of legislation that would equip us with 4,300 more asylum officers, more immigration judges, just plus up the entire system in a way that we now just don't have.
Okay, let me ask you a few other questions related to this. So right now, the Department of Homeland Security was created after 9/11. Do you feel we are much safer today than we were before 9/11 because of the department?
I do, much more.
And had a 9/11 event occur again, or?
You know, it is our job, and not just the Department of Homeland Security, but the federal government in partnership with state and local, tribal, territorial law enforcement and the American citizenry to be vigilant, because the threat landscape, as Director Wray of the FBI has accurately communicated publicly, we're in a heightened threat environment.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Okay, but newspapers can disseminate this information. Why is it if it's over social media, it's got to be banned? If a newspaper says the kind of same things that is over TikTok, it wouldn't be banned because of the First Amendment. Why is the First Amendment not protecting the TikTok social media devices?
Well, it's not to me an issue of the First Amendment. It's an issue of security. As we're talking about a company and an algorithm that is controlled by a foreign state that acts adversely to the interests of the United States, and we have an obligation to protect Americans.
But the presumption is that people aren't smart enough to know that it's disinformation and they can't make the decision for themselves. Is that right?
Well, we're talking about many, many young people that access TikTok. I would posit that in this country we don't have the level of digital literacy that I think we would all want. We're all vulnerable to disinformation, and the reality is that we have an obligation to safeguard against it. We're talking about the intentional dissemination of false information.
Okay, I should disclose that my firm is an investor in ByteDance, so I'm not personally an investor, but my firm did invest in it. So let me go on to another subject then. Okay, so what is...
You know, my answers would have stayed the same had I known that at the outset.
Okay, I didn't think you were going to change, but do you have children who ever watch TikTok, or you tell them not to do that?
You know, the one maxim from law school that I remember very clearly, I don't think our older daughter looks at TikTok, our younger daughter does. The law abhors a useless act. That is a maxim I remember. And so if I admonished our 19-year-old daughter to not access TikTok, I'm not sure I would succeed.
Okay. Do you ever watch TikTok yourself?
She is a digitally, no, I do not. She is a digitally literate consumer of information.
What is the biggest security threat to the United States right now, in your view?
So I would, in the terrorism context, I would say the threat of foreign terrorism has reemerged with a greater level of significance. And the threat of domestic violent extremists, individuals or loose affiliations of individuals who are radicalized to violence because of ideologies of hate, which are only increasing, especially after the October 7th terrorist attacks against Israel, anti-government sentiments, false narratives, other narratives propagated on.
But you feel better about our Homeland Security today than you did 10 years ago or 20 years ago? You think?
I do. I think the department and the Homeland Security enterprise writ large has matured and advanced tremendously.
And today, who are the best at cyber terrorism? Is it China, North Korea? Who do you think has the greatest capabilities of doing damage to our country in terms of foreign countries through cyber?
I would say there are four: China, Russia, Iran, and North Korea.
Okay, and in our country, you can go, if you're really good at cyber or something like that, you can go work for a venture firm, make lots of money, and so forth. If you go work in the U.S. government, you're not going to get paid as much. So is the U.S. government able to get really top-flight cyber people who can compete with the people from overseas, or do we not have the best people in our government working on these problems because we can't pay them enough?
We have the best people in the government, and there are the best people in the private sector as well. You raise an issue where we had a debate internally. To attract the best cyber talent, should we increase the salaries of those individuals to be able to better compete? We, of course, cannot close the divide, but we could shrink it.
And how did that come out?
And so I lost this debate because we did increase the salaries. And my position is very difficult for me to stand in front of a group of Border Patrol agents that risk their lives every day, and say, I've got to pay cyber talent, I've got to kick up their salary a little bit to come to work for the United States of America. Because I will tell you, the compensation in public service is different than a material compensation.
So
there is a sense of fulfillment, and there is a commitment to service. And if one does not feel that that is enough, then one should choose otherwise. So I disagreed with the plus-up.
So it didn't get done?
Oh, no, it got done.
It got done. So now we're paying people 5% more?
We're paying people a little bit more, and you look, in AI talent.
Okay.
We have an AI recruiting effort underway, and I've hit the road in recruiting, data scientists and the like, and I don't talk to them about the salary. I talk to them about what it means.
Well, are you using AI now already to kind of help?
We are, and our department is leading in the use of AI.
Can you give us any examples without violating national security about how AI is helping?
So let me share with you one example of how it has demonstrated its capacity for good as well as otherwise. And then I'll share with you a couple pilots that we have going on. We fight online child sexual exploitation and abuse. 80 million images disseminated worldwide last year. I don't think people understand the extent of the problem. We used AI to take a photograph of a young girl who disappeared at the age of about 7. And we used AI to extrapolate what that young girl would look like now, 10 years later. 10 years later. Our ability to make that extrapolation using AI was so effective that our law enforcement officers were able to identify that 17-year-old, find her, and rescue her. Remarkable.
Wow.
Let me flip it. We then see AI being used to generate an image of a child that doesn't exist or a child that does exist and depict that child, real or artificial, depict that child being sexually exploited, and it causes our law enforcement officers to devote resources on a decoy or errant mission. And so its potential for good and its potential for harm are real.
So can you tell what I'll look like in 5 or 10 years?
You will not have changed one bit.
Really? Wow. I like that artificial intelligence, right? So let's talk about your background. You don't come to the cabinet with this conventional background of many people who have this position. So where were you born?
I was born in Havana, Cuba.
Really? And what age did you leave?
My parents brought my sister and me here to the United States as political refugees when I was about 1.
And did they come in legally or illegally?
They came in illegally. My father was a bit prescient, although we didn't leave early, but we left early enough.
So there isn't that big a Cuban, or wasn't that big a Cuban Jewish community, but your mother and father were both Jewish. Your father was Sephardic.
Yes.
And his ancestors came from?
His father was from Turkey, his mother from Poland.
And your mother was Ashkenazi Jewish?
My mother fled Romania to France to Cuba late. Her father lost 8 brothers and other family in the concentration camps. They left so late they couldn't get to Israel, and our policies at that time were not as welcoming as one would have hoped at a time of great human distress.
Okay, so they came to the United States legally. Where did they come?
So we arrived in Miami, and we lived in Miami until my father found a better work opportunity in Los Angeles, California.
So you were grown up in Los Angeles?
I grew up for most of my life in Los Angeles.
And you speak Spanish fluently?
I speak it. My grammar is not something that I take great pride in.
Okay. So where did you go to high school?
I went to Beverly Hills High School.
Beverly Hills High School, with a lot of movie stars, kids, and things like that?
You know, it's interesting that would you consider Jack Abramoff a movie
Today
star?
I'm going to talk about how to succeed with a startup.
I don't remember any movie
Obviously
stars.
more than can be said here in 20 minutes, but I will do the
probably
best
when
I
everyone
can.
hears Beverly Hills High School.
The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
After a adverse verdict.
Oh, okay.
In a case that was quasi-criminal. One doesn't suffer an adverse verdict and get a chance to retry a case in a criminal, obviously double jeopardy, but this was a quasi-forfeiture case. In the first trial, the jury voted for the defendant. The judge actually issued a verdict, a ruling notwithstanding the verdict, felt that the jury had erred gravely. We took it to trial again.
Okay.
And
so you did pretty well. So you became the U.S. attorney.
Yeah, and let me share something with you. When I became the U.S. attorney,
at the age of 38.
Yes, yeah. I think I might have been ultimately confirmed at 39. But when I was the U.S. attorney, I communicated to all of the supervisors in law enforcement that during my tenure, the acquittal rate would go up, and I received a standing ovation. And I'll share with you why. And Jamie knows this as the former Deputy Attorney General. Law enforcement will never take issue with an adverse verdict if one took a tough case to trial and one worked 100% and invested everything one could in reaching a just outcome. But what law enforcement will criticize is the prosecutor who's hesitant to take a tough case to trial, even though it's a just and righteous case. And sometimes you take tough cases and the jury does the right thing. And sometimes, you know, they say when the play is cast in hell, the actors aren't angels. We have tough witnesses. They come with their own baggage. I could tell a story that will make everybody in this room quake about an acquittal. You know, we had one case where two defendants, one, the United States Marshals and the guards in the detention center. The warden and the United States Marshal during trial communicated to me a deep concern if this individual was not convicted, because the guards and the marshals who have seen everything said that around this individual, they felt they were around what the warden said is Lucifer. There was something about this individual. That case rested on a very difficult witness who was a drug user and the like, and the jury just couldn't do it. And they just felt they couldn't rely on this one witness, not exclusively, but predominantly, in finding beyond a reasonable doubt. And that individual, who was accused of stealing drugs from drug dealers and gratuitously setting one of them on fire to their death and chopping the other one up, gratuitously, that individual acquitted. Law enforcement, we took it to trial. I wasn't the trial lawyer, but we took it to trial. I was on that case intensely. They thanked us for doing everything that we could, just as that investigator had done everything he could.
But the person got off.
The person got off.
And what happened to the person?
Don't know. Don't know.
Maybe ran for Congress or something like that? No. No. So did you ever convict anybody that you thought shouldn't have been convicted?
Oh, my gosh. Absolutely not.
Everybody you put in jail?
Never. Never. This is a matter of ethics.
Okay.
This is a matter of integrity. Never can one have a scintilla of doubt with respect to the guilt of the individual when it's prosecuted.
All right, so you're U.S. attorney, and then you finish that and you go back to the practice of law?
Yes.
You went to O'Melveny?
O'Melveny and Myers in Los Angeles.
All right, so you got involved did you get involved in the campaign when Barack Obama was running for president? Were you involved in his campaign anyway?
I was.
Okay, so you ultimately get involved in the transition with Barack Obama?
Yeah, I led the criminal division of the Department of Justice transition team.
And you took a position in the Obama administration initially. What was your position?
The position was the Director of U.S. Citizenship and Immigration Services, an agency within the department that administers the legal immigration system.
All right, and then after that, you got promoted to be the Deputy Homeland Security Secretary under Janet Napolitano?
Yes.
Okay, and so that didn't convince you that this is a complicated area and you shouldn't want to come back as secretary, or that?
Complicated, difficult, challenging, and extraordinarily fulfilling.
All right. So you go back after the President Obama leaves office. You go back. You join
Wilmer Hale.
And you're in what city?
Here in Washington, D.C.
Okay, so you're a partner there. How did you get connected to the Biden administration? Did they remember you from the Obama administration, or
they did?
They just called you up and said, "Guess what? We like you as deputy. Now you can be the secretary."
I wouldn't say it was in that way, but I was extraordinarily proud to be contacted by the incoming president, the president-elect, to be considered for the secretary.
Did your family say, "You're making a lot of money here, you're way up here in compensation, and you're going to go down here again"? And that was a factor?
No.
You didn't care? Okay.
Didn't care wouldn't be. It is what it is. What it is.
Okay. All right. So, what was your confirmation like? Was that unanimous or?
Oh, I wouldn't say it was unanimous. I will tell you that I was confirmed unanimously twice until I touched immigration. I was confirmed unanimously to be the director of U.S. Citizenship and Immigration Services. And after that, I did not enjoy two easy confirmation proceedings. My confirmation as a secretary was along party lines.
And when you do that, when you're
not entirely, there were a few Republicans in the United States Senate who voted to confirm me.
When you do
predominantly
that kind of confirmation, you have to pay yourself for the legal services or getting confirmed. Do you have to pay accounting fees, or how do you get confirmed without having to spend a lot of money on legal or accounting things to fill out forms?
By filling them out oneself.
Oh, okay. Save money that way. Okay.
Yeah, I didn't spend any money.
All right. So let's talk about the Department of Homeland Security. How many people work at the Department of Homeland Security?
About 260,000.
And are they
the third largest department in the federal government?
And are they working remotely?
Both. Some remote and some in person. And our frontline personnel don't have the option of working remotely.
What are the main parts of it? I know you have certain parts that were put together out of Treasury Department, other things. What are your main divisions?
I don't think people really understand the expanse of our remit, of our mission. In the immigration area and in others, U.S. Customs and Border Protection, why do I say others? Trade and travel, TSA, Immigration and Customs Enforcement, U.S. Citizenship and Immigration Services, Cybersecurity and Infrastructure Security Agency, FEMA, United States Secret Service. Those are 7. United States Coast Guard, the 8th. The expanse of our portfolio is extraordinary, from online child sexual exploitation and abuse, crimes of exploitation, human trafficking, to facilitating lawful trade and travel, to search and rescue and security in the Arctic and the Indo-Pacific, to addressing the flooding yesterday and today in Houston, Texas, where we have a number of fatalities. And the frequency and gravity of extreme weather events is only growing. The cyber attacks from China, Russia, Iran, North Korea. It's extraordinary.
Do you ever get a weekend off? You don't have to worry about some crisis somewhere?
I take, my goal is to take half a Saturday.
Half a Saturday. Okay, and how do you stay in shape? Are you a exerciser or a worrier?
That's let me tell you, if worry sheds weight,
right,
I would disappear. I work out.
And so, can you go to a restaurant
it's
in
not
Washington?
As often as
can you go to a restaurant in Washington without people giving you tips or something about some Homeland Security violation somewhere?
Do you mean can I walk into a restaurant without someone commending us for the extraordinary work we do?
Does that happen a lot?
Keeping the American people safe and secure. I am approached from time to time, and other times not.
What's the biggest complaint you get about TSA agents?
Let me say this. 10 years ago, the concern was, am I going to, 10 plus years ago, am I going to board my flight and reach my destination safely. That was the concern. Am I going to reach my destination safely? Now the concern is how facile will my travel experience be? How long will I need to wait in line? We have moved a lot.
Okay, but sometimes people get through the TSA system, they get on the plane and they're drunk, or they hit a flight attendant, and then I never read about they're going to jail. They just seem to kind of go away. What are you doing about that?
David, I share your perspective. I remember as an assistant United States attorney, anyone messed around in a plane up in the air, they were prosecuted. It was a federal offense. The level of disruption in a post-COVID world is unprecedented in scope and scale, and I actually believe that the enforcement regime is not active enough.
Okay, so you share my view.
I do.
Okay, so if President Biden is reelected, would you continue to serve in this position?
I will tell you that I believe in the president, and I believe in his prerogative to decide who his cabinet.
All right, if the president is not reelected, and your best friend and your worst enemy approached you, and they said they were offered the job, who would you recommend take it? Your best friend or your worst enemy?
Absolutely, I don't have enemies. I would absolutely ask my best friend to take the job, and if I had an enemy, I would consider them unqualified.
Okay, because of your enemy, right? Okay, so today, people are worried about immigrants coming in illegally, but how many illegal immigrants do you think we have in the country now? And once somebody is in the country illegally, what percentage actually ever gets sent out?
So we have, thus far, this fiscal year, removed or returned more individuals than any administration, I think, for at least 10 years. So we're removing and returning more people than any administration, including the immediately preceding administration. When we took office, I believe the accounting was approximately 11.4 million undocumented people in the United States. We don't have an update to that number now, but it's been millions and millions because our system has been broken for decades.
Now, are you responsible for overseeing domestic terrorism too, or dealing with that?
We deal with the domestic violent extremism, which is the form of domestic terrorism that we're most focused on. We deal with it. We deal with it with our partners across the federal enterprise, the FBI, intensely so.
So on the Secret Service, recently I think a candidate running for president, Robert Kennedy's father, was assassinated. They didn't have Secret Service protection then. He's asked for Secret Service protection, hasn't received it. Who makes the decision on who gets Secret Service protection when you're running for president?
I do. And what we do is we have set up a process. We have defined criteria, and the process provides for a bipartisan group of congressional leaders to make recommendations to me after they have analyzed the factors that we have established. This is a protocol that was established prior to the Trump administration, and so we resuscitated it. It is apolitical, it is bipartisan, and the factors are apolitical, and I have followed in each instance the recommendation of the bipartisan group. There has been no light between or amongst us.
Well, when I worked in the White House 100 years ago or so, it was a president and the vice president got Secret Service protection.
As they do now.
But it seems as if a lot of White House aides and other people have Secret Service protection. It seems like it's proliferated. I mean, how do you decide who gets it if you're a White House aide or not?
It is based on a threat assessment, and very sadly, The threat environment in which we are living is more acute than it was when you had the privilege of serving. Look, we are now in a world where a former government official, not of course the former president, but a former government official is receiving protection because of the threat landscape.
What about baseball owners? Do they need Secret Service protection? You ever thought about that?
You know, if I recall my reading of the standings, circa this morning, you are safe and secure since you're resting in first place.
Yes, I hope so. But what happens to go south? We'll see. Okay.
Yeah, so we'll talk again, either before or after we talk about TikTok.
Okay. So on the whole, people who are watching this, you would like to say to them that they are safer today in the United States than they were 10 or 20 or 30 years ago, but we still have big risks.
I would say the following. I would say we are safer today than we were yesterday. The threat landscape is heightened, and everyone needs to be vigilant. Because what we have observed, if one takes a look at the domestic violence that has occurred, whether it is the tragic shooting in Buffalo, New York, in the supermarket, whether it is the July 4th parade in a suburb of Chicago, whether it is Uvalde, Texas, what we have learned is that the individuals, the assailants, were exhibiting signs of radicalization to violence before they committed their heinous acts. And what we, you know, the See Something, Say Something campaign that Secretary Napolitano developed, really, I think, to the general public, speaks of the abandoned backpack at a bus stop or in the airport. It doesn't necessarily speak to the individual who is exhibiting signs that should cause us all to worry. And so the question is, and what we are building, is an architecture where people understand what the indicia are and know that what help they can call. Because it's not to call the accountability regime, law enforcement, because nothing has occurred yet, but to call a trusted source, whether it is a teacher, a faith leader, a mental health practitioner, to say, look, this individual is coming to school in a hazmat suit, or this individual has withdrawn from all social interaction and is communicating messages that speak of an interest in committing a violent act. Who do I call? What outreach do I make to prevent something from materializing?
Now, sometimes when you see people who do these mass shootings, they go onto their social media and they say, oh, they said some crazy things 2 days ago or so forth. But you don't have the resource or capability to look at all crazy things on social media to figure out who's might going to do something crazy, right?
That is correct. But if they are publishing that in a so that others can see it, what do others do? And that's the muscle that we need to build in this country. How to come to help someone and prevent something from happening. So I would say we're safer, the threat landscape is heightened, and everyone needs to be vigilant. Homeland Security is an all-in proposition.
Right. Suppose a member of Congress calls you and says, I have a security problem in my district, and I'd like you to look into it, and there's a challenge. This person voted to impeach you. What would be your reaction?
The political position of an individual is irrelevant to a security analysis.
So it doesn't affect you? Okay.
Not in the least.
You don't remember the names of the people that voted against you, I guess, right?
I don't have that good a memory.
Right.
Let me be clear that I have some very productive relationships and good relationships with some of the people who voted to impeach me.
But you don't hold it against them?
You know what? I'm not a person that holds things against people. I live my life to the best of my abilities in a way that would make me, my parents, and others proud, and then others are going to live their lives and make their decisions.
Now, the first Homeland Security Secretary was a big, burly man, former governor of Pennsylvania. You're not
a great man.
You're not a big, burly man, so you're shorter, I've noticed, than me even. So when people see you and they meet
very interested to see where this is going.
So when people meet you for the first time and they say, I thought a guy was going to be big, he's in charge of Homeland Security, but he's diminutive. Is that, no? That's not been a problem?
Not for me, but let me, so I have to share a story with you. But before I do, you mentioned Secretary Ridge, a great American. When his portrait was unveiled at the then headquarters, he said, this is very, very typical of Washington. First, they paint you in a corner, then they frame you, then they hang you out to dry. So I was, as a new assistant United States attorney, I was dealing with a defense lawyer, and he had not met me. And he apparently gathered from my voice that I was tall and big. And so when he first met me in court at a status hearing, he actually thought I was an imposter. He did not believe I was who I was. But then when the judge called the case, he realized I actually was Alejandro Mayorkas. He literally did not think I was who I presented myself to be. The judge had not met me before. The defense lawyer was about 6'5", and I am almost the inverse, a little taller than that. And the judge looked at me and looked at him and said, you know, Mayorkas, you should be really happy we don't settle this case the old-fashioned way.
So to be very serious, I really want to thank you for your service to the country in many different positions. I would not be as magnanimous as you if people were voting to impeach me. I probably would have their names memorized. But thank you for what you've done for the country, and thanks for being a very good sport today, okay?
Thank you for having me.
Thank you.
Thank you, David.
Thank you. I have a gift for you. Okay.
That was Bloomberg Television's peer-to-peer host David Rubenstein sitting down at the Economic Club of Washington with Homeland Security Secretary Alejandro Mayorkas for a wide-ranging conversation here on Bloomberg Television and Radio. I'm Kaylee Lyons in Washington alongside Joe Matthew as we bring you Balance of Power, a topic that comes up frequently on this program, Joe, is of course the border, which is the purview of the Secretary. A wide-ranging conversation there that included things like TikTok, other terror threats facing the United States right now, but much of it focused on what exactly is happening over the border. The Secretary admitting over the course of this administration, several million people have migrated across, but he did make the point that more have been moved or returned than any prior administration, including the one immediately preceding this one.
Yeah, it was a newsy conversation, and it was just a different look at a secretary we tend not to see in that type of setting, Kaylee. Usually when we talk about Alejandro Mayorkas, he's being browbeaten by lawmakers in a hearing. That's the extent to which most Americans know his personality. Jordan Fabian might be an exception. He covers the White House for us here at Bloomberg, and he joins us at the table. An hour-long conversation, Jordan. Thanks for coming in. Really kind of interesting not only to hear the news, but hear from the man described as diminutive a moment ago by David Rubenstein. But he seemed to have a sense of humor and an affable approach to even the hardest questions.
Yeah, he is a personable guy. I've covered him dating back to the Obama administration when he was in charge of USCIS. And so he's been at this a long time. I think he understands the dynamics here in Washington, how this issue has become super polarized and how he's become sort of a whipping boy for the situation and seems to be have developed the thin skin over his years in Washington.
Well, one of the very first questions that David Rubenstein asked him was, what did it feel like to be impeached by the House? Because that happened in the not so distant past. But of course, there also was a lot of question in there about what he is able to do administratively without getting the go-ahead from Congress, who took that action against him, at least the House did. They talked about that legislation, the deal that was reached between the White House and the Senate that died a very quick death. In fact, it was 100 days ago today that deal was killed. What are we expecting to see, either from DHS or from the White House, in terms of executive orders in border policy as we move forward in this election cycle?
So we've already seen a couple of smaller orders, and a lot of people think that this is the prelude to a larger order, something that would, effectively allow President Biden to do what that law was authorizing him to do, which was to shut down the border if crossings get to a certain number per day, per week, per month. And so this has been under consideration for a long time. The big question is, does the president have the legal authority to do this on his own? This is a question that has dogged multiple presidents now. How much could they do on their own to address border policy? And so the holdback for the administration has been, if we do this, we might just get sued and this might not even happen. And so that's why they were pushing so hard for legislation. Now that that's dead, they seem to have turned their attention back to the executive order. We don't really have a sense of timing, but I would expect it to happen some point in the next few weeks.
Chuck Schumer says he wants to bring this bill to the floor of the Senate, get this thing going all over again, the compromise bill that Kaylee references that would have that automatic shut off, I guess, that you're describing after 4,000 or 5,000 crossings. Joe Biden was criticized for not leaning into that and letting negotiators do their work. If this really happens, does the White House re-engage?
Well, I mean, I think they've been fairly engaged. And honestly,
in terms of selling the bill.
Oh, in terms of selling the bill. Yeah, look, I mean, I think they've been talking about it a lot. And, Biden himself went down to the border right after it got killed to sort of make a point to say, hey, I was for this. Republicans, spurred on by Donald Trump, ended up killing it, and I'm going to keep talking about this. We haven't heard him, regularly talk about it, but I would imagine if Chuck Schumer's bringing it to the floor, they know it's not going to pass. This is to get Republicans on the record saying, I don't want this bill to happen, even though I want more border security.
As a standalone.
Yeah, it's a messaging move before an election. This is not something that's going to necessarily pass. The political dynamics haven't changed, and this is Democrats, one example of them trying to put Republicans on the defensive on this issue, because Democrats themselves have been really put in a box here.
All right, Bloomberg's Jordan Fabian, White House correspondent for us. Thank you so much. And of course, there's the question of whether this bill could reach the Senate floor, but a lot of people in the House will tell you, Joe, the Senate should instead put up H.R. 2 for a vote, which passed on party lines in the House months ago.
No, we never get that answer on this program. A lot more to follow here. We're going to talk about the appropriations process coming up with Jack Fitzpatrick at Bloomberg Government, and Congressman Wiley Nickel will join us right here, only on Bloomberg.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are set for the longest weekly win since February, 4 in a row. Today, the S&P 500 index continues to push higher. Little changed, up just 1 point right now. The Dow up 85, up 0.2%. We've got NASDAQ lower by 13 points, a drop there of just under 0.1%. 10-year 4.42% with a 2-year 4.82%. Spot gold today climbing by 1.5%. $24.12 for an ounce of the precious metal. Again, worth repeating, $24.12 on gold. We've got West Texas Intermediate crude up 0.8%, while Bitcoin up 2.5%, 66,897 on Bitcoin. Meme stocks moving lower again today. GameStop down another 25.6%, third day of declines. AMC Entertainment shares also moving lower. AMC right now down by 2.5%. Again, recapping, stocks higher. S&P on track for 4 weekly wins in a row. S&P right now up by 1 point. Balance of power continues. Back we go to Washington. And once again, your hosts. Here they are, Kaylee Lyons and Joe Matthew.
Charlie Pellet, thank you, and good to see you following our extended interview with Alejandro Mayorkas, a fascinating conversation that David Rubenstein brought us today as part of our Balance of Power, the Friday edition on Bloomberg TV and radio. I'm Joe Matthew, indeed, alongside Kaylee Lyons here in Washington, D.C. And Kaylee, we are coming off of a wild episode in the U.S. House that some are describing as a new low. Speaker Mike Johnson already had his hands full. This is an oversight hearing. And when we think oversight committee, you and I have talked a lot about the membership on that committee, Marjorie Taylor Greene, Alexandria Ocasio-Cortez. I don't think I need to say any more if you watch the video here. This was pretty ugly stuff. An argument broke out, got super personal. Speaker Johnson says the hearing was not a good look for Congress. We've got to take the emotion out of these things and deal with the issues on their substance. I think we may, however, be far beyond removing emotion from politics right now in Washington.
Yeah, it's fair to say. This was, of course, a late-night hearing. It started with a comment from Marjorie Taylor Greene on another member of the committee's appearance. It kind of all devolved into chaos from there. The chairman, Jim Comer, had difficulty getting things back on track, but in some sense, it just underscores the difficulty with decorum we have seen in the House of Representatives.
And what can be a dysfunctional body when it comes to lawmaking. If you can't even get people to treat each other with respect, how are you going to compromise on lawmaking?
Fair enough. Although some lawmaking is still happening. In fact, just yesterday, a bill that had passed in the House passed in the Senate related to how the SEC makes rules for accounting for cryptocurrencies on banks' balance sheets. Essentially, it was a rule that makes it a lot harder and more expensive to be a custodian of crypto. It passed the Senate with a bipartisan vote, more than 60 votes. It has been, though, promised a veto from the White House, but it raises this wider question of the fate of legislation that the House is going to be voting on next week. Crypto market structure is going to be up for a vote, and I'm pleased to say joining us now is Congressman Wiley Nickel, a Democrat from North Carolina who serves on the House Financial Services Committee. Congressman, great to have you here on Balance of Power. Welcome to Bloomberg Television and Radio. I know that you have focused a great deal on crypto throughout your tenure in the House thus far. How confident are you that this bill is going to pass a full floor vote after it made it out of committee?
Well, first of all, I just want to say how glad I am that you're not asking me about Marjorie Taylor Greene and the oversight. Thank you for that. I am excited to talk about policy and the bipartisan work we're doing in Congress to get things done. And, you know, if you're looking for good examples of bipartisan cooperation, our work in the House Financial Services Committee on digital assets is just that. This bill, the Fit for the 21st Century Act, the first ever, regulatory structure for digital assets is coming to the floor for a vote next week. I was part of a group of 6 Democrats who worked with my Republican colleagues in committee to move this bill. Similar group of Democrats in the Ag Committee as well. So we're going to get a vote next week. I'm very excited because we are operating on a 100-year-old securities law for this industry, and we need to get regulations in place. We need to protect consumers, and that's what this bill does.
Congressman, it's good to have you back. We haven't asked you about Marjorie Taylor Greene yet, but as far as crypto is concerned, what does the White House not understand on this legislation?
You know, I think the White House had a great executive order on Web3. I think, you know, Gary Gensler and the SEC are really at odds with a lot of others in the administration. So I've been very frustrated with Gary Gensler and the SEC's regulation by enforcement and frankly, just open hostility towards crypto. So we're seeing that play out. I was part of a group of 21 Democrats who voted for the SAB 121 CRA on the House floor last week. But just yesterday, we saw 12 Senate Democrats agreeing with us that the SEC is way out of line and out of step, including Senator Schumer as part of that group of 12 Democrats. So I think that's a great message. And my hope is that Gary Gensler will see the writing on the wall and rescind SAB 121. He has the ability to do that. And really what he's doing is making, you know, putting the president in a very difficult position, forcing him to choose sides. He is not serving President Biden's best interest. So what he can do is he can withdraw it and work on the custodial banking piece, which is really the big policy point here that we want to get right so that, you know, we have, you know, Bitcoin ETFs. We want our U.S. highly regulated banks to be able to custody those assets, and he's prohibiting them from doing that.
Well, Congressman, you were there speaking of the 12 Democrats in the Senate who decided to vote in favor of this legislation yesterday. And I wonder what your message is as a Democrat who is not running for re-election to those that are, and how they should be considering crypto in their policy, considering, say, the chair of the Senate Banking Committee, Sherrod Brown, is very vulnerable in Ohio. He's running against a pro-crypto advocate in Bernie Moreno. There is tens of millions of dollars in crypto super PAC money that could be mobilized against candidates like him. Is it a mistake for incumbent Democrats not to be pro-crypto right now?
I think it's a mistake for this to become a partisan issue. 20% of registered voters own crypto. You know, this industry is not going away. And the message I have is whether you love crypto or you hate crypto, you should want to have regulations. That's our message as Democrats. That's what the work I'm doing in a bipartisan way does. We provide regulations for this industry, and what I don't want to see is this become a partisan political issue, because Web3 should not be at all.
Congressman, I'm not going to ask you about Marjorie Taylor Greene specifically, but when we look at the whole story here and what's been happening in the House of Representatives, the breakdown in decorum, the dysfunction that so many people talk about, people should know that you're a freshman congressman who's in fact in his senior term. You're leaving the House, and we can get into the reasons why, but I wonder if A, you're happy to be leaving because of the environment that you're surrounded in, the workplace culture, if we can call it that, in the U.S. House. And B, if you're on your way out of this body right now, you can do anything you want. Are you doing the risky business dance in the rotunda? Like, what do you do when you have free reign on your way out the door?
Well, you know, I am not retiring voluntarily. My district got gerrymandered away from me. I love this job. I have a lot more work I want to get done. So we're working twice as hard to get things done while I'm still in Congress. There's future elections for me, but the point that I think is really important for anybody watching, the chaos and confusion that we see playing out in Congress, there is one thing to blame, and you can put your finger right on it, and it's clear as day. It's extreme partisan gerrymandering. I got elected to Congress in a Republican seat. It was a slightly Republican seat. Could have gone either way. I won by 3 points because pro-democracy Republicans made their voices heard, and voters had a real choice. And gerrymandering is wrecking Congress. Less than 10% of the seats are competitive. The other 90% are only going to go to whoever wins the Democratic primary or the Republican primary. That's how members of Congress are designed right now, is they are just mainly here to win their Democratic primary, win their Republican primary. That's why you see all these food fights and the crazy stuff you see in oversight, because that's their focus. Less than 10% are truly competitive. We won one of those. So the answer is nonpartisan, independent redistricting. That would totally change the face of Congress. You would get so many more people who are just focused on getting things done and working across the aisle. That's what we need a lot more of, and we're going to have fewer and fewer seats that are like that. We're losing mine. That's one example, and it's the thing that we got to change if we want to get sanity back in Congress.
Were you going to go on the road with Dead and Company now that you have the time on your hands? I remember distinctly the tribute you made to the Grateful Dead on the floor of the House about 1 year ago. You can own it now, Congressman.
No, 1,000%. You know, I saw you two at the Sphere. I know Dead and Company is going to be at the Sphere. I hope I can get out there to see them. You know, I know Jay Powell is definitely a fan and has not had his last Dead and Company show as well.
All right, well, we'll look for you on the vacuum cleaner during the Space Jam at the Sphere. Congressman, it's great to have you back with us here on Balance of Power. Wiley Nickel, the Democrat, North Carolina's 13th district, and that's the whole point there. Actually, really interesting point he made, Kaylee, on how partisan gerrymandering leads to more dysfunction like we saw last evening in Congress. You know, Jack Fitzpatrick has to bear through this every day up there in person.
He does. The dysfunction and whether or not it leads ultimately to real legislating, which has been harder to come by in this Congress. It has been historically unproductive, but theoretically there is still more work that they could do through the remainder of this year, specifically before September 30th, when we're going to have the whole spending fight over again. And
Do you think we'll actually do a budget this time?
Well, let's be honest, probably not. But Tom Cole, the chair of the Appropriations Committee, is at least setting out some numbers overnight.
Yeah, and Jack has this. Of course, that's Jack Fitzpatrick's beat, appropriations at Bloomberg Government, and I believe he's with us right now. Jack, are we really going to have a regular order budget process going into the next fiscal year with an election underway, or am I just making you laugh?
They are going to try to get started. How far they make it through the process is another question. I would say that Tom Cole, the new appropriations chair, even as he put out a markup schedule and said, here's what we're going to spend on each of the 12 bills, acknowledged he would be, in his words, shocked if they got everything done by September 30th. Even if the House is productive, the Senate tends to move slowly. It's an election year. They still haven't agreed in a broad way on how much money they want to spend overall on defense and non-defense. So this puts a lot of pressure on the lame duck. The expectation is you try to make as much progress as you can, and then basically whoever has a better day on election day can decide, do we want to have a quick compromise in the lame duck, or do we want to drag this out into 2025 and try to use more votes that we're getting in the next Congress to get a better deal? So there's going to be a lot of pressure on the lame duck and some soul searching from whoever wins and whoever loses in terms of getting a final vote. And in the meantime, they're going to try to make some progress, but it's an uphill battle this year.
Well, as you talk, Jack, about the kind of differences in opinion over defense versus non-defense spending, it's worth pointing out that in the top-line figures that were released by Chairman Cole yesterday, the bills would follow spending caps set in the 2023 debt limit law that equate to a 1% increase for defense spending, a 6% cut for non-defense funds. We're still talking about that debt limit deal that then nobody wanted to follow, and then everybody ultimately basically ended up following anyway when things were all said and done. Are we relitigating this over again?
Yeah, yes, they are continuously relitigating the 2023 debt limit deal, which is almost funny at this point because the debt limit suspension lifts in January. So by the time they're done arguing over the 2023 deal, they'll have to start negotiating another one to avoid a default. There was the deal that was written into the law that allows for a bigger increase for defense and cuts to non-defense. But then you may remember there was a side deal between Democratic leadership and Kevin McCarthy, who's no longer speaker, to allow more, to basically keep it even. The idea, the handshake deal was just a 1% increase for both defense and non-defense, so parity between the two. House Republicans are saying, well, that wasn't written into the law specifically, so we're not doing it, and we're cutting more money from non-defense. There's not a lot of middle ground here. There's not a lot of meeting in the middle between Republicans and Democrats, and that fight is going to have to play out for probably a number of months before there's a reckoning, again, probably in the lame duck.
Jack, I've got to ask you about this meltdown on the Oversight Committee hearing that we saw last night. We were talking about it with the congressman before you joined. I'm not going to quote what was said. Marjorie Taylor Greene instigated this. We had two members of Congress yelling at each other, criticizing their personal appearances, and things got pretty ugly here to the point where the speaker had to issue a statement. If this happened under prior speakers, Nancy Pelosi, maybe John Boehner, wouldn't these people be brought into the speaker's office and reprimanded? What's going to happen here?
Maybe, maybe not. You know, you look specifically at the Marjorie Taylor Greene story when she was first elected. She had made a number of comments that led to a fight over whether she would serve on committees. She is now on a committee. She kind of allied herself to some extent with Kevin McCarthy, not necessarily tied closely to leadership, but it's a bit of a sign of the times that even when there is a push to keep members off of committees for one reason or another, those pushes don't always succeed. And in a very, very narrow majority that Republicans have in the House, even if they feel one of their members is doing something inappropriate, they may rely on their votes and may have to work with them, not indefinitely, as we saw with George Santos, but sometimes for a long time. So there are a lot of factors that play into that, and Marjorie Taylor Greene seems to almost be at the top of the list of members who have tested the limits of leadership's patience.
All right, Jack Fitzpatrick, congressional reporter for Bloomberg Government, always covering the chaos for us. Thank you so much. And Joe, it is pretty remarkable to see the scenes of last night, the responses and the ongoing dialogue today. It's even pitting some Democrats against each other. The Democratic senator from Pennsylvania, John Fetterman, basically was comparing it to the Jerry Springer show, and Alexandria Ocasio-Cortez was not a fan of that comparison.
Well, and he was making apologies to the Jerry Springer show, to be more specific. We're going to talk more about this with our panel coming up in the late edition of Balance of Power at 5 p.m. Washington time. First, it's Bloomberg Business Week, right here on Bloomberg TV and radio.
Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. It is Bloomberg Business Week. I'm Tim Stenevec. Carol Masser is off today. In her place, we have Shonali Bassick. She is Chief Global Financial Correspondent for Bloomberg News here in the Bloomberg studio. Shonali, good afternoon. How are you?
How are you, Tim?
Doing pretty well.
We have
It's
a
good
lot
to have
going
you
on
here.
today and a lot
We do
going
have
on
a lot
this week.
going on. That's right.
First thing we're looking at, though, is stocks really hovering at records. Remember, we crossed that Dow 40,000 mark earlier this week, and now we are still looking at some exuberance, some fear under the surface, too. We're going to be joined a little later by Bloomberg's chief equity strategist to tell us what we need to know about this rally and how durable it is.
Also, it's not just stocks that are doing well. The past 3 years have been the best time to find work since the 1960s. The U.S. is also doing better than the EU, the U.K., and Japan when it comes to growth. So why is President Biden getting hit when it comes to the polls? We've got our Bloomberg News Real Economy reporter with all the data joining us a little bit later.
And speaking of politics, there is one man in the eyes of Donald Trump, and he is a money machine. John Paulson is somebody that a lot of people have been talking about his future in a potential Trump administration, potentially Treasury Secretary. But there's another man, not known as a money machine, but known as Scott. Who's that, Scott? He's Scott Bessent. We're going to talk about who he is. He was a former portfolio manager at Soros and why he is kind of perking up here in the ears of a Trump administration, potential administration officials.
That Soros connection is so interesting, given that George Soros is sort of this boogeyman when it comes to many in the GOP. And finally, we're going to have Options Insight with Abigail Doolittle. She's talking meme stocks in the next week's NVIDIA earnings. All that and more over the next hour. First, though, a check of the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much. NVIDIA shares, they are trading lower right now. We've got NVIDIA down 1.6%. Briefly on those meme stocks right now, both lower. We have got shares of GameStop down 23% and AMC lower by 4.5%. The Dow, the S&P, NASDAQ, all mixed right now. 1 point drop, little change on the S&P, 52.95, down less than 0.1%. Dow Industrials up 62, gain there of 0.2%. NASDAQ lower by 32, a drop of 0.2%. 10-year, 4.41% with that 2-year, 4.82%. Spot gold pushing higher now. We've got gold up 1.6%, 24.13 the ounce on the precious metal. Crude up 0.9%. 79.95 on WTI. Reddit shares, they are surging now by 11.5%. Reddit is in a partnership with OpenAI that will bring its content to the chatbot ChatGPT and other products, while also helping the social media company add new AI features to its forums. Again, recapping, looking at a mixed Friday here, on track for a winning week, 4 in a row. S&P right now down 2 points, little change there, down less than 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. It is a mixed Friday, but fair to say stocks are wavering near record highs. This after a rally that put the market on track for its longest streak of weekly gains going all the way back to February. It does follow a set of inflation reports that kind of rekindled hopes that the Fed would be cutting rates this year. The S&P 500 heading toward its 4th week in a row of gains. The move higher has lost some steam in the past couple of days, though the market is still on pace for its best month so far this year. Someone who I know is not surprised at all by this rally is Bloomberg Intelligence Chief Equity Strategist, Gina Martin-Adams. Gina, good to have you with us this afternoon. What does your research tell you about the sustainability of the rally that we've seen, not just in the last 4 weeks, but really since October?
Yeah, it's a great question. Thanks for having me, Tim. I do think that when we look at the broader sort of subset of indicators that really are meaningful for determining direction of the S&P 500, we look at 17 of these indicators in our market health checklist, and that checklist has really just persistently gotten more and more supportive of gains, whether it be from technicals or earnings or even the macro indicators, as you alluded to with inflation, but also even with the growth indicators from the macro. We've seen just persistently stronger supports for the equity market emerging, not just over the last 6 months, but really over the last 18 months from the lows of October of 2022. The only thing that wobbled a little bit was coming into the second quarter. We did get some technical cues suggesting that we were due for a period of chop. That period of chop lasted, some total of a month before stocks started to recover again. But nonetheless, that was really the only negative indicator. Everything else seems to be pretty positive.
Speaking of positivity, Gina, we also had, of course, Walmart results this week already. And when we look ahead next week, we have another set of retailers starting to come to the market here with their first quarter results. And you looked at the consumer kind of holding up in the Walmart results, but you also had mostly the wealthier consumer holding up there. Yeah. Do you expect that that consumer fear is waning, or do you think next week brings a new set of troubles?
Well, I think this is a really, really intuitive question, Sonali, because one of the things that we're finding is a bit of a distinction in what is priced in the market versus what's happening in the macro. I do think that realistically what you want to do when you're assessing the value of any equities is determine what is priced in. And what we actually see is increasingly in consumer discretionary stocks at large, but also even in consumer staple stocks, generally valuations are extremely depressed relative to other sectors, relative to long-term averages. This would imply that a weak consumer is already priced. So any sort of even moderate upside surprise or confirmation that the consumer is not sort of caving into the pressures of the macro, higher interest rates and the like, would generally be pretty supportive. And I think this is an important clarification to make is the consumer may, not hold in terribly well, but that's already kind of anticipated by consumer stocks to a great degree. If the consumer clearly just totally falls through the floor, stops spending, really capitulates to the pressures, I don't think that's necessarily priced, but certainly not a strong consumer or even a steady consumer appears to be anticipated by the equity market right now.
Gina, you mentioned the choppiness that we saw back in April, and I'm wondering if the choppiness is totally behind us at this point.
Yeah. It does feel that way, certainly, with the equity market in particular, the large cap market making new highs, with the small cap index even starting to break former resistance barriers. It does appear that our corrective process is in the rear view. Now, This is a tough call, though, at this point in the cycle, because typically the earnings season itself is what creates a degree of optimism, and we're kind of tailing off on earnings season. As you noted, we've got some retailers, we've got NVIDIA left, but not a whole lot else to really support the equity market and give that confirmation of steady earnings growth going forward. So we go into this vacuum period, and usually the period after earnings season or between earnings seasons becomes a potential volatility period for stocks because we're more dependent upon macro news in the absence of earnings news. So you do anticipate, the price trend would say that things are certainly clearing through. We've cleared the hurdles presented by technicals at the latter part of March and early April. But the fundamentals, we're not going to get those stories every day. We're not going to get the company confirmations every day that things are fine. So we become somewhat dependent upon the news flow, somewhat dependent upon what the Fed says, policy making at large, as well as the economic data, which may present some volatility for stocks in the next 6 weeks or so.
Well, that's exactly where I want to go, Gina, the volatility as a result of economic data. In one of your recent notes, you and the team wrote about the increased importance on inflation data that we get in a high inflation environment. And I was struck earlier this week when we got the CPI data. Remember, this is not the Fed's preferred measure of inflation. It's it's not CPI, it's PCE. Right. But in a period of high inflation, as you and the team write, this data take on a more significant role. Yeah.
Inflation data in particular takes on a more significant role. I think we cover very clearly the aspect of the way that inflation can manifest itself in the equity market through the Fed, right? Obviously, faster or higher than anticipated inflation does change potential Fed outcomes. The change in interest rates can manifest itself in valuations in the equity market. What I think is less clearly defined or clearly talked about and should be is the fact that inflation itself can be really meaningful as a driver of margins for corporations, which ultimately becomes a big component of the earnings outlook. And right now, we're watching really carefully the spread between consumer prices and producer prices as an indicator of that margin outlook. That spread is still very positive, but producer prices are accelerating a bit, even as CPI or consumer prices have stalled. If we're moving into an environment where the difference between consumer prices and producer prices goes from positive to negative, or producer prices really gather momentum while consumer prices have stalled, that could create trouble for the margin outlook. And that's something that I don't think a lot of people are talking about. It's something that's been a huge tailwind for stocks over the last 18 months or so. We need to see that tailwind sustain, or we could be in for a rockier period of profitability going into 2025. It's definitely something we're watching.
I'm glad you brought that up too, because we had an interview earlier this week with David Kostin over at Goldman Sachs, and part of the reason he thinks that the S&P is going nowhere is because his EPS estimates for the rest of this year are below what consensus is expecting in terms of growth. How much risk is there to growth expectations, even just this year, let alone next?
Yeah. I don't agree that there's a ton of risk in consensus expectations. I think actually the consensus is probably a little too light on the potential for growth through the remainder of 2024. This is a lesson we've learned the hard way over the course of the last 4 quarters, is an overdependence upon macro inputs to drive your forecast at this stage in the cycle proves a bit insufficient. And most of that is because of the margin recovery that tends to emerge after major recessions and earnings. We are in that period of margin recovery right now, recovering from an earnings recession that results in much more robust gains than most of the consensus expectations historically, as well as any macro implied forecast for earnings growth. We've also seen for several consecutive quarters now, consensus has just been far too pessimistic on the outlook. And I think that reflects this really uncertain macro climate, the uncertainty with respect to higher interest rates, and when that will ultimately come back to really suppress growth has created this environment of underestimation. So I actually disagree. I don't think the consensus is too optimistic based upon our modeling. Certainly the macro has been too pessimistic, and that has suppressed expectations. It remains to be seen where we go from here. And certainly we do need to incorporate macro data as it changes over time. But I think that forecast has proven to be an insufficient indicator, frankly, of what to expect from earnings, and I want to respect that.
Well, wherever we do go, Gina, we know you will be there giving us the details. Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence, joining us this afternoon from New Jersey. Well, speaking of financial markets, one person who certainly has the power to influence financial markets is the Treasury Secretary, which brings us to our next story. It's one of today's most read on the Bloomberg terminal. It's about 2 men. One of them, in the eyes of Donald Trump, is a, quote, money machine. The other is a guy named Scott. Each of them, if November's election breaks the ex-president's way, could be America's next Treasury Secretary. So let's get to the interview with Kathy Burton, Bloomberg News hedge fund reporter. She's here in the Bloomberg studio. So Kathy, 2 men, both familiar names, I think, to the Bloomberg audience, John Paulson, Scott Bessent. Give us a refresh, though, on each of them.
Well, John Paulson is famously known for making a lot of money during the financial crisis. He shorted subprime bonds and made $15 billion for himself and his clients. He lost a lot of it since then. And Scott is a former Soros Fund Management employee, later the CIO, and now he runs his own macro hedge fund.
I think, first of all, the lead of the story is brilliant, right? And it also speaks to, John Paulson is kind of widely known at this point because of that 2008 moment, but Scott Bessent, maybe the American public knows a lot less of. And so how much does Trump actually know him? And how is he kind of getting introduced to the circle here at this point in time?
Well, I think Trump is certainly aware of John Paulson because, as you say, he's a big name. And also, he has done business with Trump, sold him a place in Florida, a golf course in Florida, and also has held a lot of money raisers this year, including one that came right after the Democrats had their big one in New York, and they raised something like $50 million. So definitely gets attention.
So how is Scott Bessent then getting on his radar now?
Well, he's also been a big donor personally. He's also held fundraisers. And in addition, he's been sort of acting as a economic spokesperson for Trump's campaign. He's been on all sorts of TV, radio, podcasts, Fox News,
And all those interviews are up on Truth Social, so you know that Trump sees them.
Well, so interestingly here, too, when you look at Scott Bessent, Treasury Secretary, on one hand, you want somebody who is strong in regulation and who can deal with things like sanctions, but there is a sense here from the Wall Street perspective, right, that somebody close to the markets would be a good thing, at least from the eyes of investors. What's Scott Bessent's track record as an investor?
It's been good. I mean, especially during his days at Soros, he was very much part of the breaking the Bank of England, the bet that they made $1 billion on in the 90s. He's made a bunch of money in Japan, long and short the yen, over the years in like the 2012 and after period. So he's had success, and he definitely knows world markets in a way that John Paulson doesn't, which has people have said that about him in the Trump camp.
One name that hasn't come up in our conversation thus far is Steve Mnuchin, who was actually a rare constant in the first Trump administration, up to now the only Trump administration. Is there a chance that he could take the role again as Treasury Secretary?
I think there is a chance. It's unclear to us if he would want that job again, but definitely he has a very good reputation in the market of doing a good job. And I think that people who like Scott say that he would be similar to that.
What about potentially is out there that could prevent Paulson from actually taking the job here? Yes, he's done fundraisers. Yes, he's been an outspoken proponent of President Trump. But are there some elements that might prevent him from actually taking the job if he were offered?
Absolutely. He has a lot of investments, which he would have to sell. And it's unclear whether he still has a big position in Fannie Mae and Freddie Mac, but if he does, that would be very problematic, and he would have to get rid of that. So that would be a big issue for him. Also, maybe in a confirmation, he's going through a nasty divorce. That might not go down so well.
So on the Bessent side, also curious, you wrote a little bit about how Trump himself almost name-checked him at a rally. So what was the trade that Bessent was actually making when it came to kind of optimism? We're talking a little earlier about this whole idea that, is Trump better or is Biden better for the economy? This was an investor, wasn't it, that kind of bet on a Trump rally at one point?
Yes, absolutely. He said in a letter to investors back in February that he thought that the market was going up in part because people were betting that Trump was going to win the election, and that it would keep going up until and unless it looked like he was not going to win the election. And he put a lot of money in that, and it's been a very good bet for him.
Well, like I said, a most read story on the Bloomberg terminal today. Be sure to check it out. Our big thank you to Kathy Burton. She's Bloomberg News hedge fund reporter here in the Bloomberg studio. Well, up next, speaking of the election, as Shonali mentioned, the past 3 years have been the best time to find work since the 1960s. The U.S. is doing better than the EU, UK, and Japan when it comes to growth. So why is Biden getting hit in the polls? We speak with our Real Economy team reporter, and we get the data right after this. This is Bloomberg Business Week.
on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index moving lower, on track for a winning week, where right now the S&P is lower by 9 points, down 0.2%. Dow Industrials holding on to a 10-point gain, with the Dow at 39,880, little changed. On NASDAQ, lower by 66, a drop there of 0.4%. 10-year, 4.41%, with a 2-year that's yielding 4.81%. Spot gold up 1.6%, now higher by $38 the ounce to $24.15. And West Texas Intermediate crude $79.99 a barrel, up now by 1%. GameStop shares now lower by 24.3%, tumbling again for a third day of declines after the company said it may sell up to 45 million shares, further pairing the meme-fueled rally that had sent the stock flying at the start of the week. AMC was another big winner earlier in the week. AMC Entertainment down now by 4.3%. Recapping, stocks are mixed. The Dow up barely, up by 1 point, little change there. S&P now in the red, S&P down by 11, a drop of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Do appreciate it. Well, as I mentioned, the Biden years have been the best time to find work, going all the way back to the 1960s. The U.S. has bounced back from the pandemic with stronger growth than international peers, such as the EU, UK, and Japan, and stronger growth overall than under President Trump. That said, Americans give Donald Trump the edge over Joe Biden on the economy in poll after poll. That's because instead of being focused on the strong economy, voters are focused on the steep jump in prices from the post-pandemic surge in inflation. Mark Niket is Bloomberg News Real Economy Team reporter. He joins us from Columbus, Ohio. Mark, let's talk data here. We're Bloomberg, after all. So what do the data tell us about how Americans under Trump did versus how they're doing under President Biden?
Well, our Bloomberg economists looked at 6 key economic indicators and to gauge the performance of the U.S. economy under both presidents. And it turns out conditions were better under Trump for disposable personal income, inflation, the stock market performance, and mortgages, while the unemployment rate and GDP, overall economic growth, was better under Biden. But it was really those kitchen table metrics, inflation, prices, and income, disposable income, that I think is really carrying the day here with voters. That's what they're focused on. You know, this affects their day-to-day life, and these kitchen table issues are really driving their opinion about the presidential candidates right now.
You look at inflation, it's such a complicated story, isn't it? This whole idea that, yes, prices are up, but then you're also upset about every part of that story. The idea that it's harder to buy a home as well with this higher interest rate environment too. I mean, ultimately, is it the higher interest rate regime that President Biden has lived under that has really compounded the issue for many Americans as well?
Yeah, and the White House, would say, it's not really fair to hold high inflation against Biden, but that he's being unfairly, hit with high prices because, he took office, at the aftermath of the pandemic. It was still really dealing with the pandemic, an inflation that was driven in some parts by, the staging of the supply chains and other issues globally that, had nothing to do with the presidency. Whereas Donald Trump took office, in the middle of the longest expansion in history. But, it's a small comfort for, consumers who are facing higher prices. They don't want to hear that, inflation rate has come down and prices are moderating if the prices for eggs and groceries and other things they buy are more expensive today than they were 3 years ago.
Yeah, Mark, as I was reading your story, I felt like I could have shared an anecdote from what happened over the weekend. I was visiting a friend in Colorado, and I was at a hardware store buying a specialty battery for something. And I went over to the battery section, and there were 2 gentlemen over there. And I said, okay, this is where the batteries are. And they were both talking about how much more expensive batteries have become in the last, and they specifically said this, 3.5 years. And what struck me about that comment was, well, that just goes exactly to the time that President Biden has been president. This is something that I think Americans are thinking about a lot, not just at their dinner tables. And it's not good news for the current president come November.
Right, because he could tell people till he's blue in the face that the numbers are getting better or that other metrics are doing really well, like the unemployment rate. But if the prices are still high, that's just going to override everything. It also allows President Trump to say, well, I had the greatest economy in the history of the world when I was president, and we'll go back to that if you elect me.
Well, on that note too, is it that you have voters prioritizing pricing and inflation over jobs, or just also this idea that you started to recognize in the story where a lot of the jobs lost when you think about the Trump administration was during COVID? Did he almost get a pass on that because of COVID?
Well, I think the Trump campaign would certainly argue that it should be the case, that if you're going to compare the jobs record, you should only compare jobs in the first 38 months of the Trump administration to the first 38 months of the Biden administration, because that factors out the job loss because of COVID. But it kind of cuts both ways. The COVID hit on Trump, in some ways, helped Biden on the rebound. When the economy recovered, we recovered jobs that, had been lost in the pandemic that sort of factor into the job gains under Biden. So he can point to, this big job gain number. And it's not all from, COVID recovery, but, just the fact that the economy was recovering and coming back from the lockdowns under Biden helps his overall jobs record.
Mark, a job is not necessarily just a job, and your piece goes into this when you actually peel back different layers of the data here. Talk a little bit about who have gotten jobs in the recovery that the current president has overseen.
Right. That's one thing that the Biden folks would argue is a difference between President Biden's jobs records and the job record under former President Trump. And that is that the labor force participation rate of women, minorities, other disadvantaged folks is much higher under Biden. The unemployment rate is low for sure, but the economy is also pulling in folks into the labor force who traditionally have not been part of the labor force. So the idea is that, the rhetoric, at least the campaign rhetoric, is that it's an economy working for more people and all people, not just for the few.
Speaking of kind of wealth and advancement here, the stock market has done, as you mentioned in the story, well under